So hello everyone. Good evening, Prashant. Good evening, Vinci. Good evening, everyone. So my voice is clear. Am I audible? Am I visible? Okay, yes. So today we will be completing the RBI notifications. In one session, we will try to do the December to July RBI notifications. Okay. And we will be discussing them in depth so that you have the complete clarity. You all have the RBI News Tab document. Okay. In Zoom, you have like all the students have the RBI News Tab document. So like today, whatever we will discuss. So we will be discussing the RBI News Tab document in a comprehensive manner, in a complete manner, so that you get the complete clarity. Okay. So whatever I am teaching you, so after that, like after your session, you can go to the documents and you can read through them again. So you will have greater clarity and you will be able to read the documents in a better manner. Okay. At the end, I will take your queries and we will have a one-to-one session where I will open your like mics and you can discuss the problems with me. Okay. So hello to all the YouTube students also. So welcome to the class and welcome to EduTap. So let's start with the session without any delay. So today what we are going to do is, okay. So today we are going to discuss all the RBI notifications, all the RBI press releases from December 2022 to July 2023, and we are going to go in the backward manner. Like we are going to start from the July 2023, and then we are going to go to the June, and then we are going to go in such a manner so that you get the recent one before, and we can start the recent notifications with a fresh mind. Okay, so are you all ready? Give me a thumbs up in the Zoom and give me a thumbs up in YouTube also. Yes, all okay. Very good. Nice. So I will take, yes. Okay, let's start with it. So I am bringing the first question in front of you we are starting from the July 2023. And the first question in front of you is that the 33rd conference of the state finance secretaries was held in Mumbai. The theme of the conference was dash, which was attended by the finance secretaries of 23 states and 1 union territory. Okay, I have started getting the answer. Okay, everyone is giving the right answer. That is A. That is absolutely correct. So the 33rd conference of the state finance secretaries, this happened, and the theme is very important. The theme you have to remember, that is the debt sustainability states perspective. Okay, so it is talking about the sustainability of the debt. If the states are taking the debt, the state should be able to return the debt without any default. So that is debt sustainability in the long term and in the short term. The state should have the finance to return the money. Okay, it is from the state's perspective because it is the state finance secretaries that are coming together and that are conducting this meeting, that are having this conference. Okay, so the A is the right answer, absolutely correct. It was attended by, you need to remember, by 23 finance secretaries of the state and 1 finance secretary of the union territory, officials from the Ministry of Finance, Controller General of Accounts, and the Comptroller, Auditor, and General of India. Okay, the idea of this conference was to highlight the importance of the debt sustainability for ensuring the long-term fiscal health of the states. Debt sustainability, I have given you the idea. It is the debt, the returning capacity of the states. So the state should take only that much loan that they have the capacity to return without any default. Okay. So now coming to the second question, that is Sri Shaktikanta Das, Governor of the RBI, as a part of the dash celebrations in the memory of the late Professor P.C. Mehalbonis, who made invaluable contributions to the Indian statistical system and economic planning, launched the, so in the celebrations, the next generation data warehouse has been launched. If you know about the P.C. Mehalbonis, which five-year plan was based on the model of, was based on Mehalbonis model? If you can tell me about that also. So you should have the clarity. Yes, second. Very good, Amit. Yes, Rahul, very good. Yes. Yes. So A is the right answer. That is National Statistics Day. So the CIMS, that is the Centralized Information Management System. This is the next generation data warehouse. So the CIMS is the next generation data warehouse, that where the data will be collected, the analysis will happen, the visual analytics will be provided. And this was launched on the day of 29th June on which the National Statistics Day is celebrated in our country. And this is on the National Statistics Day that the CIMS has been launched by the RBI. Okay, so the answer is A. So the RBI has embarked on a major change in its information management framework for handling the massive data flow, for the aggregation, for the analysis, for the public dissemination, and for the data governance. The CIMS has been launched, and this has been launched on the 17th Annual Statistics Day conference as part of the National Statistics Day. And this is the next generation data warehouse, CIMS, that has been launched. Okay, so this is all regarding the news article regarding the RBI notification. If there is any query, you can write. Okay, so now the next question is regarding the data that is collected from major banks indicates that out of the total banknotes in rupees 2000 denomination received. So what has happened that the RBI said that we are taking the rupees 2000 notes out of circulation. Okay, so the public has to return this rupees 2000 notes, though they will remain the legal tender, but still the public has to deposit or exchange the rupees 2000 notes. Now the data has been provided by the banks that this percentage of the rupees 2000 notes has come in the deposit form, and this percentage has come in the exchange form. So that you have to do. So I'm getting the answer C. That is absolutely correct. Yes, in the YouTube also, Nilesh, Milli, Yathav, very good. So yes, it is correct. 87% is in the form of the deposits, and the remaining around 13% has been exchanged into other denomination banknotes. Very good, Mehek. Very good, Muskan. Absolutely correct. Okay. So here the news article is just you have to remember percentages. No need to remember the data points. Okay. So here data collected from major banks indicates that out of total banknotes in 2000 denomination received back from circulation, 87% is in the form of deposits. So the people had the option that they can deposit the rupees 2000 notes in their accounts by like whatever, there was no limit. They can deposit as much as they want as per the account limit. And in the exchange, there was the limit. So can you tell me that what was the limit per bank? If you are going to bank, how much was the limit for the exchange of rupees 2000? Yes, Surbhi, Pradeep, very good. It was the limit of rupees 20,000. So rupees 2000, you can exchange with the bank if like you are going to any bank. So rupees 20,000 was the limit for the exchange. With the business correspondence, what was the limit? For the business correspondence, 4K, very good, Mehek. And for the RBI offices, what was the limit? It was 20K. Very good. So this was all regarding this, and 76% of the rupees 2000 banknotes in circulation as on May 19, 2023 have since been returned. So from May 19, 2023, this return started of rupees 2000 banknotes, and from then 76% of the rupees 2000 banknotes have been returned. So this is the data till now that out of the total rupees 2000 banknotes, 76% has been returned to the RBI. Okay. Next is regarding the authorized card networks tie up with the banks or the non-banks. See what happens that you go to a bank to take a debit card or to take a credit card. The bank will never ask you that you want Visa debit card or you want MasterCard debit card or you want RuPay debit card. Whatever is available to them, they give you. This is the authorized card network. So in our country, there are 5 authorized card networks. Anyone or any two, they can tie up with the banks or non-banks for the issuance of the debit or credit prepaid cards. So the choice of providing you the card, of which card network you will getting the card of, this is the choice that is with the card issuer. So the card issuer is usually the bank or the non-bank, okay, that is providing you the card. So they agree with some particular card network and they issue the card. You have no choice. The customer has no choice in it usually. So now the RBI has brought the draft circulars that the customer should have the choice. So the card issuer shall not enter into any arrangement or agreement with card networks that restrain them from availing the services of other card networks. Okay, so this is true. This is absolutely true. The RBI has said that the card issuers, the bank and the non-banks, they should not enter into such an agreement. Okay. Card issuers shall issue cards across more than one card network. So that is true. It is the card issuers, that is the bank and the non-banks, that provide you with the cards, with the debit card or credit card, and they should be able to provide you with the card more than one card network. If you want of Visa, you can get it. If you want of RuPay, you can get it. Card network shall provide an option to their eligible customers to choose any one among the multiple card networks. So everyone has given the option E. Everyone has said option E. Why is it so? That is not correct. Okay. Dhaneshwar is saying yes. Sakshi and Dhaneshwar is saying option C. That is correct. It is the card issuers that can provide you with the option. Because the card issuer is issuing the card. It is not the card network that can issue the card to you. The customers can get the card only from the card issuers, that can be the bank or the eligible non-bank. Okay. So be very careful when you are reading the option. The card issuer shall provide an option to their eligible customer to choose any one among the multiple card networks. So it is the card issuer that can give you this choice. Okay. Card issuer and card network shall ensure to adhere to the above requirements. So the complete draft circular is in front of you. So the draft circular mandates the card issuers, that is the banks and the non-banks, to issue cards on more than one card network, along with providing customers the facility to choose. It was happening that the card issuer was directly getting into the agreement with the card network, and there was no choice that was given to the customer. So now it has been said that the customer should be able to choose one among the multiple card networks. So the card issuer shall not enter into any particular arrangement or agreement with any one card network that restrain them from availing the services of other card network. Card issuers shall issue cards from more than one card network. Card issuers shall provide an option to the customers to choose the card network. The option may be exercised by customers either at the time of issue or any subsequent time you want to change, you can. Card issuers and card networks shall ensure that the existing agreements that they have signed, so the agreement that they both have signed, if when they are renewed, so there shouldn't be no agreement that is restricting the card issuer. Fresh agreement executed from the date of this circular. So in that also, there should be no agreement that should be particularly binding to the card issuers. So the directions at para 3, B and the C, these are the directions that are effective from October 1, 2023. You need to remember this date, that this both. So these are the directions that have become, that will be effective from October 1, 2023. So the card issuers, this one is under the provision of the RBI that in the final circular, they will be approved or not. But the B and C have been approved. Okay. So the card issuers shall issue cards across more than one card network. That has been said, as well as the customer should be able to choose. If I'm going to the bank, I should be able to choose Visa or RuPay or what. Okay. Next is, as per the draft circular that has been provided by the RBI, which of the following are the authorized card networks in India? So here I'm getting the answers E. Sorry. So here it should be not. So let me make a correction. It is not, okay, are not being made. Is it fine? Is it okay now? Okay, it is which of the following proposals are not being made by the RBI in its draft circular. So here the answer E is absolutely correct. American Express. So there are the five authorized card networks in India, that are the American Express Banking Corp, Diners Club International Limited, MasterCard, the NPCI has launched the RuPay, and there is the Visa. Okay, so the affiliated network branded as American Express, Diners Club, MasterCard, RuPay or Visa, they are displayed on the card. So in the card, you see these names. Now so before going to the June 2023 notifications. So this is a big announcement from the YouTube community that is joined here. So I know that it can be troublesome to find that from where to study, how to study. So you can join the live crash course in which you are getting more than 25 plus live classes. You are getting the short notes, the mind maps, the current affairs, the complete test series that is going to help you practice, and even you are going to get the evaluation of the test. Okay. So this is the live crash course that you can join, and the first and the second class, that is the the afternoon class and the evening class. These two are being made live for you. Only these you will get. Okay. After that, if you want to join, you can join the live crash course for your better practice. Okay. And if you only want to, you are very comfortable with your preparation, you only want to practice, then you can practice through the test series and you can get the evaluation. Okay. See, so this is the course. Only the 2 classes are going for free. After that, you have to avail this. Okay. So the test series, you are getting the objective test, you are getting the descriptive tests. The best thing is that you will be getting the evaluation. So if you want to get avail the live crash course for your preparation, you can. If you want to avail the test series only, you can regarding the practice. Okay. So you can check the link in the description for the better understanding of these course. Any query, you can mail us at hello@edutap.co.in. Okay. So now coming to the June 2023. Now recently in June 2023, the MPC. So the evening one, that was the 3 to 5 Narveer sir's class. The English class, that was free and that was provided to you. And now 6 to 8 or 9, the class has been provided to you regarding the RBI notifications, that is mine class. Okay. After this, no class will be provided to you from the live crash course. So recently in June 2023, our Monetary Policy Committee at its meeting decided to keep the policy repo rate under the liquidity adjustment facility unchanged. What is the current MSF? So I'm getting the answer D here. The enrolled students, they are like, if you are enrolled in the live crash course, so you will be getting all the classes, right? So it is D, 6.75%. So this is the current MSF. See, the current repo rate, first of all, the current repo rate is 6.50%. The SDF, that is standing deposit facility, it is less than the repo rate by 0.25%. The MSF is greater than the repo rate by 0.25%. Okay. So if the MSF, if the repo rate is 6.50%, the MSF is 6.75%. So it is very easy. Okay. So I hope you already remembered this, and we have already understood this many times. So the CPI inflation, the target is 4% plus minus 2%. Okay. Now coming to the next question, according to the provisional estimates released by the NSO on May 31st, 2023, India's real GDP growth for 2022-23 was placed at what percentage? That is higher than the second advance estimate of 7%. So here I'm getting answer C, that is absolutely correct. It is 7.2%. Okay. So the small things that you can use in your descriptive answer writing. So it is manufacturing PMI. So the PMI is an indicator of the business activity. Okay, both for the manufacturing and the service sector. The cumulative or the combined PMI is also released, as well as the separate PMI for the manufacturing and the service sector is also released. The manufacturing PMI at a 31-month high in May. So you can understand that for the manufacturing sector, the business activity is very good, and the business activity in the service segment at a 13-year high in April-May 2023. So you can understand that the business activities are working very good. This shows the resilience of our country, and this shows that our country, the business activities are working very well. Okay. Next is the India's foreign exchange reserves were placed at $595.1 billion as on June 2, 2023. And this is the most recent data that is available. The CPI inflation fell sharply to 4.7% in the April 2023. Okay, and this is a very low percentage, and it is below 6%, and it is around 4%. So you can understand that this is the upper tolerance level in the inflation band. In the inflation band, the 2% is the lower tolerance level, and the 6% is the upper tolerance level, and the 4% is the mark that we want to achieve. Okay, so it is lower than the 6% and it is around 4%. So that is good. So the CPI inflation was good. Now the MPC took note of the moderation in the CPI headline inflation in March-April into the tolerance band, in line with projections reflecting. See, many things are given here. In the examination also, same happens, that a lengthy question is given. You just have to focus on the keywords. Monetary Policy Committee projected CPI inflation at dash for 2023-24. It is 5.1%. So just focus on the keywords. Okay. Now we will be focusing on the keywords. I just wanted to show you that the lengthy questions can come in the examination, but you have to focus on the keywords. Okay. So I'm getting the answer D. That is absolutely correct. The RBI, the Monetary Policy Committee has given the projection that for the real GDP for the 2023-24, the percentage will be 6.5%. Okay. The growth, the real GDP growth has been given at 6.5%. This is the projection of the MPC. And for the inflation, for the CPI inflation for the 2022, 2023-24, the projection has been given at 5.1%. That is higher than the previous Monetary Policy Committee meeting of April 2023. Okay, projections you have to remember. Next is also here, the CPI inflation projected at 5.1%. The real GDP growth projection has been shown at 6.5%. And the extra information has been provided to you that why we are expecting the real GDP growth for 23-24 to be at around 6.5%, because the expectation is of the normal monsoon. It is expected that the private consumption will be good. The economic activity will be good. There will be robust credit growth. There will be moderation in the commodity prices. Okay. But there are the problems also. That is the external demand is the problem. There is the weak external demand that is going to go. Geographic fragmentation is happening and the geopolitical tensions are present. Okay. Now coming to the next question. International conference has happened under the India's G20 presidency. This was jointly conducted by the RBI and the Indian Computer Emergency Response Team. So you have to name the conference. So here I'm getting the answer D. That is absolutely correct. So only thing that was important from this RBI notification was to remember the name of the conference, and you can remember the that the conference is held by or conducted by the Reserve Bank of India and the CERT India. The name of the conference is Cyber Security Exercise for Banking Sector. Okay. The next is Sri Shaktikanta Das. Now you got this question in the phase 1 also. Yes, I'm getting the answers like very fast. So the financial inclusion dashboard has been launched by Sri Shaktikanta Das, governor of the RBI. This financial inclusion dashboard name is Antar Drishti. So the name of the financial inclusion dashboard is Antar Drishti, that will provide the insight to access and monitor the progress of the financial inclusion that has happened in India. Okay. So here the financial inclusion index was also mentioned. So let us discuss a question on the financial inclusion index. So this has been conceptualized as a comprehensive index that provides the idea about the financial inclusion. The financial inclusion does not only mean that you are going to the bank or not. It also means that you are investing or not. You have the insurance or not. You are availing any kind of financial service or not. So this includes the comprehensive index incorporating the details regarding the banking services, regarding the investment, insurance, postal, as well as the pension sector in consultation with the government and the respective sectoral regulators. So the financial inclusion index is provided by the Reserve Bank of India, is made by the Reserve Bank of India, which is a comprehensive index made in consultation with the government and the respective sectoral regulators. I'm getting the answer here, C. That is absolutely correct. You have to tell which of the following statement is incorrect in regards to financial inclusion index. So the index captures information on various aspects of the financial inclusion. 0 means that you are financially excluded. There is the complete financial exclusion. 100 means that there is complete financial inclusion. The financial inclusion index comprises of 3 broad parameters, that is access, usage, and quality. Okay, access is a parameter, that is correct. Access is a parameter, but it does not have the highest weightage. The highest weightage in the FI index is of the usage, and Abhishek has given the percentages. Usage has 45% of the weightage, access has 35% of the weightage, and the quality has 20% of the weightage. The index is responsive to ease of access, the availability, the usage of this availability and the usage of the services, and the quality of the services. This comprises of 97 indicators. So there are 3 broad parameters that consist of 97 indicators, okay, in total. And the FI index does not have any base year. In the second iteration of the FI index, there has been a growth of 4.6% from 53.9 in March 2021 to 56.4 in March 2022. So you can understand that the financial inclusion has improved by 4.6%. Okay. So the next is the Reserve Bank of India had set up the Committee for Review of Customer Services Standards in RBI regulated entities on May 23, 2022 under the chairmanship of Dash. So I'm getting the answer D here, Shri BP Kanungo. That is absolutely correct. The committee was set up for the review of the customer service standards in the RBI regulated entities. Okay, this was to review that how the customer service is provided to the to the customers in the RBI regulated entities. RBI regulated entities are the banks, NBFCs, the CICLs. Yes, IFEs, that is All India Financial Institutions. So the committee is under the chairmanship, was formed under the chairmanship of the Shri P.P. Kanungo, that is the former deputy governor. The terms of reference has been provided to the committee, that the committee had to evaluate and review the quality of the customer service, examine the evolving needs of the customers, because now they are using the digital services, identify the best practices that are going on abroad as well as in the domestic territory. Okay, what are the best practices for the customer service that is provided? Suggest the measures to bring improvement in the quality of customer service and the quality of the grievance redressal mechanism in the regulated entities. Okay, so yes. Now here, before the P.P. Kanungo committee, there was the Talwar committee, there was the Koiporia committee, Tarapore committee, and the Damodaran committee. And now there is the P.P. Kanungo committee that was formed in 2022. Okay. So these are the terms of reference that we have discussed: evaluation, review of the customer service, evolving needs of the customers, identify the best practices, suggest measures to leverage the technology for the enhancing the customer service. Next is urban cooperative banks got an extension of time to achieve the priority sector lending targets. The phase in time for the achievement of the PSL targets by the urban cooperative banks has been extended up to what? By which the urban cooperative banks have to achieve the PSL target of what? So I'm getting the answer C here. That is absolutely correct. Yeah. So here the answer is C. That is March 31, 2026. So this is the extension. So before, they had to achieve 75% of the adjusted net bank credit. This much they have to provide to the PSL, priority sector lending, by March 31, 2024. So extension of 2 years has been provided to the urban cooperative banks to achieve the 75% of the adjusted net bank credit for the priority sector lending. So this has been extended up to March 31st, 2026, and the target that has to be achieved is 75%. Okay, so before the timeline is till 2024, but now the timeline has been extended to 2026, and the sub target that the urban cooperative banks have to fulfill is for the weaker section target, that also they have to fulfill by March 31st, 2026. Okay, so if there is any confusion, you can tell me. Is there any confusion? The second question is, urban cooperative banks are advised to contribute to Rural Infrastructure Development Fund to fulfill their priority sector lending shortfall. Which of the following organizations established RIDF? So I'm getting the answer NABARD. That is absolutely correct. So here all UCBs were advised to contribute to the RIDF. See, so if the urban cooperative banks, they are not able to achieve the target that has been defined, so then they can like if they are having the shortfall of the target, then they can provide the money in the funds. Okay, in the funds. So if they are not able to achieve the target or the sub targets, and if they are not achieving the targets from March 31st, 2021, that is from 2020 to 2021. Since then, if they are not achieving the target, they have had to contribute in the funds. But now it has been said that you are exempted and you have been given relaxation. So if you were not able to complete the target in the 2020, 2021 and 2021, 2022, it's okay. But your target are going to, like if you are not able to achieve the target or the sub target from the March 2023, that is 2022, for the year 2022, 2023, then you have to provide the money. Then you have to contribute to the RIDF or the other eligible funds. So this is the complete understanding of that. And the deposits that has been made in these years, if some UCB has already made the deposit, that deposit will be utilized for the offsetting of any shortfall that has happened in this financial year, and the excess deposit will be returned. Okay. The eligible UCBs are permitted to open new branches up to 10% of the number of full-fledged branches in a financial year, subject to a maximum of what limit? So I'm getting the answer that is correct. So the eligible UCBs are the financially sound and well-managed urban cooperative banks So the financially sound and well-managed urban cooperative banks, they have the general permission. They have the general permission to open the 10% of the branches, 10% of the full-fledged branches that were present in the previous year, up to a maximum limit of 5 branches. Okay, up to a maximum limit of 5 branches. So FSWM, urban cooperative banks will be FSWM, that will be financially sound and well managed when they are maintaining the CRAR, when the tier 1 is maintaining the CRAR of what percentage, and the tier 2 to tier 3 will be tier 4 will be maintaining the CRAR of what percentage, that you have to tell me. As well as if the UCBs are maintaining the net non-performing asset of more than 3%, not more than 3%. So yes, tier 1 UCBs, if they are maintaining 9% plus 1%, then they can come under the financially sound and well managed. Tier 2 to tier 4 have to maintain 12% of the CRAR. If they are maintaining plus 1%, then they will come under the FSWM criteria. As well as net NPA should not be more than 3%. Net profit for at least 3 out of preceding 4 years, subject to it not having incurred in the net loss in the immediate preceding year. No default in the CRR and SLR. Sound internal control system with at least 2 professional directors. Core banking solutions should be fully implemented. Core banking solution connect the different branches of the bank. No monetary penalty should be imposed on the bank. Okay. If there is any confusion, or if you want me to slow down, if there is anything that you want, you can convey. Is everything going fine? Yes. Okay. Okay. So the general permission, see, for the branch expansion, if the urban cooperative banks are under the FSWM criteria, financially sound and well managed criteria, then they have the general permission for the branch expansion, and they can open 10% of the branches that they had in the previous year. So if they had 100 branches in the previous year, then you will say that they can open 10 new branches, but it is up to the maximum limit of 5 branches. So if they have 10 branches in the previous year, then they can open 1 branch. If they have 20 branches in the previous year, they can open 2 branch, and so on, maximum up to 5 branches. Okay. And the minimum branch that they can open is 1 branch. Okay. So next is Dr. Michael Debatra Patra, Deputy Governor, Reserve Bank of India, inaugurated the sub office of the Reserve Bank in, okay, I'm getting the answer Nagaland. That is absolutely correct. So the RBI's office has been opened in Nagaland, and for the Arunachal Pradesh, for the Itanagar, there is no particular office. So you can understand that there can be a question that for which northeastern state or for which northeastern place the RBI office has not been opened. Okay. Now coming to the next question, as per the recently released data by the Reserve Bank of India, more than half of the households deposits during the 2022-23 came from 5 states. Which of the following states is not among the 5 states? So the total deposits from the total deposits, the total households deposit, the maximum deposits, more than half of the deposits came from 5 states. Which of the following state is not among the following? So I'm getting the answer D and E. Yes, the answer is D here. That is Madhya Pradesh. Okay. So the 5 states were Maharashtra, Uttar Pradesh, Delhi, Karnataka, and West Bengal. Here you need to remember one thing, that this is the data for 2022-23, but the data for the deposits has been released by the Financial Stability Report, and that data you have to remember, that is 10%. Here it is written 10.2%, but this is not the correct data, because the recent data has been released in the Financial Stability Report, that is 10% in 2022-23. Okay. So remember this very clearly, huh? Do not make the mistake in the examination. The contribution, other data, you only have to remember. See, I'm telling you very straightforwardly that you can remember the yearly data. You do not have to focus on the quarterly data. Okay. Contribution of the female customers in total deposits increased to 20.5% in March 2023 as compared to 19.8% a year ago. So these are the data, some of the data you can remember, that if a question comes in the descriptive answer writing, you can quote this data. Okay. The share of term deposits, so in total deposits, increased to 56.9% in March 2023 as compared to 5.2% in a year ago. So the female related data and these kind of data you can remember for the descriptive answer writing. Otherwise, just try to remember the yearly data. Okay, this point is important, that the 5 states name has been given. The next is the external debt to GDP ratio declined to 18.9% at end March 2023 from dash at end March 2022. So the external debt to GDP ratio has declined. So before it was what percentage? No, the 10% was the deposits with the scheduled commercial banks that grew. The growth of the deposits with the scheduled commercial banks was 10% as per the FSR. Here the answer is E. Here the correct answer is 20%. So the external debt to GDP ratio declined. Before it was 20%, now it is 18.9%. Okay, so that is good that the external debt to GDP ratio is declining. Out of the total external debt, the share of outstanding debt is the highest with the non-financial corporations. The highest of the outstanding debt out of the total external debt is with the non-financial corporations, followed by the deposit-taking corporations, and then the general government, and then the other financial corporations. So the government is in the third number. Loans remained the largest component of the external debt, external liability, we can say. Out of the external liability, the highest liability is coming from the loans. Next is the current account balance recorded a deficit of dash percentage of GDP in 2022-23 as compared with the deficit of 1.2% in 2021-22. So here I'm getting the answer A, that is absolutely correct. The current account balance recorded a deficit. That is, there was a current account deficit. There was a current account deficit of 2% of the GDP in 2022-23. The previous current account deficit, the current account deficit in the previous year was 1.2%. Okay. So this is an important data that you have to remember. The BOP basis. See, remember that the foreign exchange reserves decreased by $9.1 billion during the 2022-23. Usually, you do not have to remember the number data points. Mostly, like, you should not focus on the number data points, but these kind of data points are important. Okay, the yearly data points are usually important. So here, this is important that the loss, we have faced a loss of US $9.1 billion during the 2022-23. This much of the reserves we have lost. Okay. The current account deficit, I hope you have remembered. The net invisible receipts were higher. So that is good for our country. And the net FDI flows, this is also important, was at $28 billion in 2022-23, which were lower than the $38.6 billion in 2021-22. So the foreign exchange reserves, this you need to remember, because in the same month, the RBI released this data twice. Next is the call money is usually availed for 1 day. If the bank needs the funds for more days, it can avail money through notice market. Here the loan is provided from which to which days? Mehtab, what do you want me to repeat? See, the foreign exchange reserves have depleted by US $9.1 billion in the 2022-23. Okay, and the current account deficit was 2% for the 2022-23, which was 1.2% for 2021-22. So here the answer is D, that is 2 days to 14 days. So the call money means the borrowing that is happening for overnight. Notice money means the borrowing or the lending in the unsecured funds for tenors up to 14 days, that is exclusive 1 day. So from 2 days up to 14 days, the borrowing that is happening comes under the notice money. For more than 14 days, if the borrowing is happening till a year, it is term money. Okay. So the scheduled commercial banks, this was provided to you. The scheduled commercial banks, they can set their limits in the call money, notice money, and term money. So they can take whatever percentage of the lending they want to take, but it has to be approved by the internal board. Okay. Okay. And for the other, there is the limit that is 100% of the capital funds for the call and notice money, and 125% of the capital funds on the given day. Okay. Next is as per the recently issued guidelines on the default loss guarantee in digital lending. So the recent, you have to tell this, that the RBI, the regulated entities shall ensure that the total amount. So what happens that the digital lending is provided by the digital lending platforms that are the lending service providers that are connecting with the customers on behalf of some bank or some NBFC. So the digital lending providers are the lending service providers. They can be the lending service providers that are connecting with the bank, with the customers on behalf of some particular bank or NBFC. And on the lending service providers are getting the basic information from the customer, and the bank and the NBFC is giving the loan to the customer. If the customer is not able to return the loan, then this lending service provider should also have some responsibility, because this lending service provider brought this customer to the bank or the NBFC. So for the responsibility, for the credibility, the LSP should also have some kind of loss. Okay, so to the regulated entity shall ensure that the total amount of the default loss guarantee. So the LSP provides this default loss guarantee that should not exceed 5% of the amount of the loan portfolio. So this is the complete understanding. I hope you have got this. The answer here is D, that is 5%. Okay, the answer here is D, that is 5%. So these are the applicable entities. So all commercial banks, primary urban cooperative banks, state cooperative banks, they all have to follow this, that if they are connecting with the lending service provider, then they are getting into the contractual arrangement, that is the default loss guarantee. The regulated entity is getting into the arrangement with the lending service provider. Okay, and the lending service provider should be providing the customers to the regulated entity. Only those lending service provider can provide the default loss guarantee, because they should be responsible for something now. So if they are providing the customers to the regulated entity, then they also have the responsibility, and that responsibility should not exceed the 5% of the amount. So the default loss guarantee that is provided by the lending service provider on any outstanding portfolio, it should not exceed 5% of the amount of that loan portfolio. Okay, and the regulated entity shall invoke the DLG cover within a maximum overdue period of 120 days unless they have discussed this problem with the borrower itself. Okay, next is, recently the Reserve Bank of India proposed to expand the scope and the reach of the e-rupee vouchers. Which of the following statements is incorrect regarding e-rupee vouchers? So here the e-rupee is a digital voucher. I hope you already know about it. It was launched in August 2021. It rides on the UPI system. At present, the purpose-specific vouchers can be issued by banks only on behalf of the central and the state governments on some limited, to a limited extent. It can be provided on the behalf of the corporates also. At present, the non-bank prepaid payment instruments, they cannot issue the e-rupee vouchers. Okay, it is only the banks that can issue it. The D, yes, Pradeep is saying that the D is the proposal. That is true. The RBI has proposed that there should be the permission that should be given to the non-bank prepaid payment instrument issuers to issue the e-rupee vouchers also. And the proposal also has been given that there should be the issuance of the e-rupee vouchers on behalf of individuals also, because it is limited to central and state government and to an extent to the corporates. So it should be, this facility should be for the individuals also. So the RBI has also after the MPC, the statement on developmental and regulatory policies was released. And in that, the Bharat Bill Pay system processes, this was also discussed. So the scope of BBPS was further expanded in December 2022 to include all the categories of the payments and the collections, both recurring and non-recurring as well as facilitating the inbound. So whatever the money is coming inside the country for the bill payments, that can also come under the BBPS. Okay, internationalization, issuance and the acceptance to the RuPay cards. So the RuPay cards are the Indian cards. I hope you remember this, that this is the only card network of India itself. Okay, this has been developed by the NPCI, and to expand the payment options for Indians traveling abroad, it has been decided to allow the issuance of RuPay prepaid forex cards. Okay, so it will be RuPay prepaid foreign exchange cards. So you will get the card, international card, that will be, in that you will be getting the money. Okay, by banks in India for the use at the ATMs, POS machines, and online merchant overseas. So you will be able to use it overseas. Okay. So it is for the recognition of the rupee internationally. So for that, this is the step that has been taken by the RBI. Next is, as per the current regulatory framework, which of the following categories operating international services, financial services center banking units are permitted to offer non-deliverable derivative contract? So there are some banks, okay, that are allowed to open the IFSC banking units, that is written as IBUs. So which category of the banks, okay, which are allowed for offering the NNDC and DDCs? So it is the authorized dealer category 1 banks that are allowed to offer the NDDCs to persons resident outside India. Okay, so it is correct. Only one was the correct statement. Only one is the correct option. Okay, it is only the authorized dealer. It is as per the existing regulatory framework, the authorized dealer category 1 banks operating IFSC banking units, they were permitted to offer the NDDCs to persons resident outside India. But now it has been said by the RBI that the authorized dealer category 1 banks that are operating the IFSC banking units, they can offer the NDDCs to the resident non-retail users. So till now, the NDDCs were only provided to the resident outside India. That is to the foreigners, we can say. Now the NDDCs can be provided to the resident that are inside India, but they are non-retail users. They are non-retail users, okay, for the purpose of hedging, that is for the purpose of decreasing their risk in a manner. But the transaction shall be cash settled in Indian rupees only, because here the residents are involved. The flexibility of the cash settlements of the NDDC's transactions between two. So if the banks are transacting among themselves in the IBFC, so they can transact in the other currencies also, as well as in Indian rupees also. If they are transacting with the resident outside India, similarly, they can transact in INR or foreign currency. Okay. Now the next is, we are coming to the May 2023. We have completed July and June. If there is any confusion, you can share. Okay. So no confusion. Recently, under India's G20 presidency, the 4th edition of the G20 tech sprint has been launched. Okay, and the 2023 tech sprint focus on the problem of the cross-border payments. Which of the following is not the problem statement? So the anti-money laundering and the countering of the financing of the terrorist technology solutions has to be developed so that the illicit finance risk can be reduced. Okay, so we have to develop such kind of technology so that we can reduce the illicit finance risk. Foreign exchange and the liquidity technology has to be developed so that the settlement can happen in the emerging market and developing economic currencies like rupees and such kind of currencies that are of the developing economies. Technology solution has to be developed so that the multilateral cross-border CBDC platforms can be developed. Through these platforms, the CBDC, the central bank digital currency, can be utilized for the transactions. Okay. So here the right answer was B, because this is the only statement, this is the only option which was not a problem statement in the tech sprint. Okay. So the tech sprint, I hope you have understood about this, that this tech sprint was launched by the RBI and the BIS Innovation Hub, Bank for International Settlements Innovation Hub, and it has provided the three problem statements for the cross-border payments, for the development of the cross-border payments, for the development of the innovative solutions for the cross-border payment. So the first edition was regarding the regulatory compliance and supervision technology, and the second edition was regarding the green and sustainable finance. The third edition was regarding the CBDCs. Now the fourth edition is regarding the cross-border payment. Okay. The next is Ministry of Micro, Small and Medium Enterprises, that is the MSMEs, have launched the Udyam Assist platform for the facilitation of the formalization, so that the informal micro enterprises, can be made formal through the online generation of the Udyam Assist certificate, so that the informal micro enterprises can be made formal for them to have the benefits, the PSL, priority sector lending benefits, so that they can take the priority sector lending benefits. Okay. So you have to tell the Udyam Assist platform was launched by the government in, I'm getting the answer B here. That is January 2023. That is absolutely correct. Okay. So the Udyam registration portal, this was launched in July 2020. And the Udyam Assist portal has been launched in 11 Jan 2023. Here you can see the micro, small and medium enterprises, how they are divided. So what has happened that the Udyam Assist portal has been launched by the Ministry of MSMEs. Now this Udyam Assist portal has been launched to make the informal micro enterprises formal in a way that they can take the benefits under the priority sector lending. So they will not be completely formalized. They will only have the certificate, the Udyam Assist certificate, so they can take the benefits of the priority sector lending. Now, if they want to be the complete formal micro enterprise, they have to get the documents so they can convert from the Udyam Assist portal to the Udyam Assist platform to the Udyam registration portal. So they need to, the micro enterprises need to have the complete documents so that they can convert from the Udyam Assist platform to the Udyam registration portal. So they will be considered the formal micro enterprises for all the other benefits also, not only the benefits of PSL. So remember this very clearly, that the Udyam Assist platform will provide you the certificate, Udyam Assist certificate to the informal micro enterprises, so that they can have the PSL benefits. Okay, and the interface has been created so that the micro enterprises can convert from Udyam Assist platform to the Udyam registration portal, so that they can have the complete transition and migration of the IMEs of the informal micro enterprises, so that they can become the formal micro enterprises. Coming to the 40th half-yearly report on the management of foreign exchange reserves was released. The foreign exchange reserves were said to be 588.78 billion US dollars in April 28, 2023. But I have told you that what you have to remember, you have to remember the recent data, that is 595.1 US dollar billion. This was released in the June 2023 MPC meeting. Okay, yes, very good. So here you can read about the SDR or the tranche position, but that is not much required. You can have the basic understanding through the additional information. Now coming to the next notification. As per the amendments of the master direction on know your customer domestic wire transfers of dash and above, see the master direction has been amended for know your customer. In this, the amendment has been made for the cross-border wire transfers and for the domestic wire transfers. See, wire transfer means electronic transfer of the money is happening, especially the large amounts of the money is being transferred. This is the wire transfer that is happening. So if the originator, that is the sender of the money, is not the account holder in your bank, then if this person is sending the money of above rupees 50,000, then the bank has to take all the information regarding the sender and the beneficiary. Okay, so here simply the master direction has been amended. So if the domestic wire transfer is happening, so for the cross-border wire transfer, whatever amount it is, you have to take all the information regarding the originator, regarding the sender and the beneficiary. So in the cross-border wire transfer, in all the cases, all the information has to be taken. But for the domestic wire transfer, if the sender is the account holder, the bank already have all the information, and the bank has to take the information, extra information also. But if the domestic wire transfer of rupees 50,000 and above is happening, where the sender is not an account holder. So when the sender is not an account holder, then if the domestic wire transfer is happening of above 50,000 or of 50,000, then the regulated entity, then the bank or the other regulatory entities have to take the information of the originator and the beneficiary. Okay. So wire transfer means electronic transfer is happening. And here the electronic transfer can happen to the other country also, to the domestic country also. Cross-border wire transfer to the other country, the money is being sent. Domestic wire transfer in the country, the money is being sent. Ordering RE means that the sender is going to this regulatory entity to send the money. Originator means this is the person that is sending the money. That's it. So for the domestic wire transfer, for the domestic wire transfer that is happening, if the originator, that is the sender of the money, is the account holder, you already have all the information, and you should also take the information. The bank should also take the information of the beneficiary. But if the person is not the account holder that is sending the money, so in that case, the domestic wire transfer of rupees 50,000 and above, in this case, if the originator is not the account holder, then the regulated entity should have all the information. And what are the information? These are the information that should be taken by the regulated entity. Money transfer service scheme. Now, who can tell me that for which thing this scheme is there? MTSS is the scheme for what? Inward remittance. Very good, very good. So MTSS is the scheme for the inward remittances, that is the money that is coming inside the country. Okay. So for the personal remittances from abroad, this is the scheme that is available. Okay. Only 30 remittances can be received by a single individual beneficiary under the scheme during a calendar year. There is no cap of the money that is being received if the money is coming from the from the account, or in the account, or through the check, or through the demand draft. But if the money is coming into cash, then the limit is of USD 2,500 that has been placed on individual remittance under the scheme. So I hope you have understood that if the money is coming in the form of amounts up to rupees 50,000, sorry, this may be paid in cash, and above that, so only 30 remittances can be received by a single individual beneficiary under the scheme during a calendar year. A cap of USD 2,500 has been placed on individual remittance under the scheme. Okay. If in total the money, there is no particular limit that is regarding the bank account. Like if the money is coming into the bank account, but amounts up to rupees 50,000 can be taken in the cash only. So in the cash, there is the limit. Okay. So now coming to the next question. Recently, RBI announced to take part in the Global Financial Innovation Network. First edition of greenwashing tech sprint has happened. The virtual tech sprint is hosted on the Dash Digital Sandbox. So I'm getting the answer C here, Financial Conduct Authority. That is correct. So the Global Financial Innovation Network is under the chairmanship of the Financial Conduct Authority. And the GFIN has launched the greenwashing tech sprint. Who can tell me that how many of the international organizations joined the greenwashing tech sprint? So yes, 13, correct, absolutely correct. So yes. Okay, so here there is nothing much to understand. I have told you that this is the greenwashing tech sprint that happened, and this was hosted on the Financial Conduct Authority Digital Sandbox. Okay. Next is RBI launched the 100 days, 100 pays campaigns for banks to trace and settle the top 100 unclaimed deposits of every bank in every district of the country within 100 days. According to the RBI, the balances in the savings and the current accounts which are not operated for dash years. So the balances in the savings or the current account which are not operated for 10 years, or the term deposits that are not claimed for 10 years after the date of maturity, they are classified as the unclaimed deposit. So yes, the answer is D. Okay. So the 100 days, 100 pays campaign, this happened for the banks to trace and settle the top 100 unclaimed deposits of every bank in every district of the country within 100 days. And this commenced from June 1, 2023. Okay. The Reserve Bank of India approved the transfer of rupees 87,416 crore as surplus to the central government for the accounting year 2022-23. Under which section this you have to tell now? Yes, under section 47 of the, yes. So the board approved the transfer of this much as surplus, 87,416 crore as surplus of the central government for the accounting year 2022-26, 2022-23, while deciding to keep the contingency risk buffer with the RBI, that is of 6%. The range of the buffer is what? 5.5 to 6.5. Yes, very good, Sobna. The range is 5.5 to 6.5. So it is the under section 47 of the RBI Act, the provision is there for the RBI to transfer the money surplus to the central government. Okay, this is as per the review of Bimal Jalan committee, the contingency risk buffer is under the range of 5.5 to 6.5. Okay. Now coming to the contingency risk buffer is that for any kind of risky situation, the bank has the Reserve Bank of India has to keep 6%. So for the risky kind of situation, the Reserve Bank of India has to keep 6% of the contingency risk buffer, 6% of the balance sheet of RBI. Here, RBI governor held a meeting with the National Federation of Urban Cooperative Banks and Credit Societies Limited. Select federations of urban cooperative banks from various states and the CEOs of select UCBs, it was decided that the standing advisory committee meetings will henceforth be held once in 6 months. So what has happened? That there was the meeting, RBI governor had a meeting with the National Federation of Urban Cooperative Banks. So this is the NAFCUB is the apex level promotional body of the urban cooperative banks. So they decided that in every 6 months, the meeting will happen. Okay, the participants, the standing advisory committee meetings will happen. This standing advisory committee give the recommendations regarding the urban cooperative banks. It was also decided by the RBI that it will nominate a senior officer who will be the single point of contact for all the issues related to the urban cooperative banks, because they are usually the banks that are in the transitioning phase. Okay. And a formal interaction with the designated senior officer would be held quarterly. Next is RBI held a conference for the directors on the boards of public sector banks in New Delhi under the theme, okay, yes, governance in banks driving sustainable growth and stability. So the governor acknowledged the role that is played by the banks in supporting the economy and maintaining resilience, along with improved financial performance of the banks in the face of the several adverse shocks in the recent times. But the governor has said to the directors that they have to strengthen the governance and the assurance functions. They have to reduce the risk so that the banks are able to identify and mitigate risk at the early stage. They have to strengthen the governance and they have to take the assurance functions. They have to continue being resilient. Okay, they need to continue have the financial and the operational resilience. The theme of the conference was the governance in banks driving sustainable growth and stability. Now coming to the next question. So we have discussed that the Reserve Bank of India has set to withdraw the rupees 2000 banknotes starting from May 23, 2023. So here the limit for the banks to exchange the banknotes is of what? So yes, we have discussed the limit is of rupees 20,000 for the banks. The limit for business correspondence is rupees 4,000. The limit for RBI offices is rupees 20,000 again. Okay. The Reserve Bank of India decided to withdraw the rupees 2000 from the circulation, and this is till September 30, 2023, that the opportunity for the people is open to either exchange or deposit the rupees 2000 banknotes. The total value of these banknotes in circulation has declined from 37.3% in 2018 to 10.8% in 2023. Okay, for the regional offices of the RBI, the limit is rupees 20,000 for the exchange. Okay, so the business correspondence limit is rupees 4,000. All banks shall discontinue the issue of rupees 2000 denomination banknotes. The banks that are holding the currency chest, they shall ensure that no withdrawal of rupees. Currency chest means that some banks have the chest treasury like of thing where the banknotes are kept. So out of the treasury, out of the chest, there should be no withdrawal of the rupees 2000 banknotes. Okay, so this is all regarding the notification. Now coming to the question that this exercise of the returning of rupees 2000 banknotes, the deposit or the exchange facility has been provided till what date? So I'm getting the answer D, that is correct. We have discussed it is till 30 September 2023. So to complete the exercise in a time-bound manner, and to provide the adequate time to the members of the public, all banks shall provide the deposit and the exchange facility till 30 September 2023, and you have to tell the percentage. So before, the rupees 2000 notes in circulation was 37.3%. That has come down to 10.8%. Okay. Next is, recently the RBI issued an advisory to banks and other RBI regulated entities to ensure a complete transition away from LIBOR. Which of the following currency is not used in computing the LIBOR? So I'm getting the answer A, that is correct. So there are the five currencies. There are the five currencies that are in the LIBOR. There are the five currencies according to which LIBOR is decided. So it is Swiss franc, euro, pound sterling, yen, and dollar. Okay. And it is released in 7 maturities. So here you can see that it is released. The LIBOR every day is released in 7 maturities and 5 currencies. So in total, 35 LIBOR were released. So it was said that we are going to stop issuing the LIBOR. And so India also decided to stop using the LIBOR. Okay. So the RBI has asked the banks and the financial institutions to adopt some other reference rate. That is, LIBOR is what? LIBOR is the reference rate for other interest rates, or it is the benchmark rate for the other interest rates or the other rates. So it was the reference rate. So instead of LIBOR, now we need some other reference rate. That is the alternative reference rate. That is, for now, it is secured overnight financing rate. So by which time we had to shift to this alternative reference rate? So here the timeline has been given to July 1, 2023. Okay, so that is correct. Anyone that is facing any problem in understanding? Okay, everyone fine? So I hope that you already have studied the notifications. So I hope this space is fine with you. If there is any problem, you can tell me, okay? So RBI has issued an advisory to the banks that and other regulated entities. So it was said that complete transition away from the LIBOR has to happen by July 1, 2023. So all the commercial banks and all the financial institutions, they had to follow this, that they have to transition away from LIBOR and they have to start adopting the alternative reference rate. Now, which of the rates was dependent on LIBOR? So it was MIFOR. So it was said that the MIFOR should also stop because it is the rate that is dependent on LIBOR, and MIFOR is the rate that is used in India. Okay, it is the Mumbai Interbank Forward Outright Rate. So because it is dependent on LIBOR, we have to stop this. And against MIFOR, what has to be adopted? Yes, modified MIFOR. So modified MIFOR, which was dependent on SOFR. So against MIFOR, the adoption of the modified MIFOR should happen. Okay. So Abhishek was asking regarding SOFR. So we will discuss about that. Okay. Yes, New York releases it. So banks are encouraged to cease using the MIFOR published by which authority? So I'm getting the answer. So I'm getting the answer A here. That is absolutely correct. So it is the banks are encouraged to cease to stop the use of the Mumbai Interbank Forward Outright Rate that is published by the Financial Benchmarks India Private Limited, because it is the rate MIFOR is dependent on LIBOR. Okay, the secured overnight financing rate is a broad measure of the cost of borrowing. See, what was happening? SOFR is determined on the basis of the US repo transactions, overnight repo transactions. Okay, so like in our country, the RBI is providing the repo operation. That is, the RBI is providing the lending service to the banks, and the banks are providing the collateral to the RBI, and the bank has also to pay the repo rate. Similarly, in US also, in the US, there is the treasury securities. We say that collateral in India is government securities. In the US, the collateral is treasury securities. Okay. So the on the basis of the overnight repo transactions, the rate that is going on, the interest rate, the rate that is going on in that market, according to that, the SOFR is determined. So SOFR is published by the Federal Reserve Bank of New York. It is the good representation of the general condition in the overnight treasury repo market, and the SOFR is based on the real transactions that are happening. Okay, so it is a good rate of reference for our country. Okay, and that's why it has been said that it is a good alternative reference rate. So now the MIFOR, that is modified Mumbai Interbank Forward Outright Rate, will be used, that is dependent on the SOFR. So the MIFOR was dependent on the LIBOR plus some premium rate plus some forward rate. Okay, forward premium rate, and the SOFR is going the modified MIFOR is going to be dependent on the SOFR plus some forward premium rate. Okay, so these are the different rates that are released by different authorities, we can say. Okay, these are the risk-free rates, and these are the risk-free reference rates that can be utilized. They are based on the active market transactions, which provide a barrier against the manipulations. Okay, they are the alternative rates that are published at different times, and they are also currency specific. LIBOR was determined in various currencies, but these are the particular rates that are determined only in one currency. So like the SOFR, it is determined for US dollar. The SONIA is determined for pound sterling. Ester is determined for euro. Saron for Swiss franc. Tonar for Japanese yen. Next is here levy of charges on foreign exchange, forex, prepaid cards. LIBOR was administered by the Intercontinental Exchange, or IC. Okay. So now coming to the to this notification, see, it was said that levy of charges on foreign exchange prepaid cards. So what was happening, that the foreign exchange cards are given when you are traveling abroad. You get the international cards, store value card or charge card or smart card, that is given to you. So that is given to Indian residents that are traveling abroad on the business or private visit. So these cards are given to you so that you can use these cards on the ATMs in US or in any other country. You can use these cards in the ATM and you can take out the money that you want, or you can directly pay through these cards to the merchant. So as well as bank authorized, so international debit card are also given, which can be used by the Indian resident for drawing up of cash, for taking the cash in some other country. So now these cards, the charges. Now, when some authority is giving you the card, they will take some charges. So what was happening, that the charges were taken in some other currency, US dollar, pound sterling, euro, or some other currency. So RBI said that when you are issuing these cards to Indian residents in India, why are you taking the charges in some other currency? So the RBI said that take the charges in the rupees only. Take the fees in rupees only. Okay. Now coming to the RBI EduTap April 2023. Coming to the first question, that is regarding Prava. So I hope you will be able to answer this question. So I'm getting the answer D here. Sovna, Pradeep. Yes, very good. So recently RBI has decided to develop a secured web-based centralized portal that is named Prava. So Ganesh is saying that the PDF will be shared or not, ma'am. So yes, the PDF will be shared of this class. It will be shared in the Telegram group. Okay, by tomorrow it will be shared. So here I'm getting the answer D. See, yes, A is Daksh. Very good. It is the it is the Reserve Bank's Advanced Supervisory Monitoring System. So this is Daksh. The core banking solution of the RBI is eKuber. It is for the paid students. Vineet, you will be getting the PDF today only. So I will upload this the PDF today only, because you will get the PDF in the course now. So you do not worry about that. So Reserve Bank Advanced Supervisory Monitoring System is Daksh. Core banking solution of RBI is eKuber. To obtain the license authorization, it has been said that the Prava will be launched, so that the authorization, so that the authorization license and for the validation, if the regulated entities have to take the licenses, validation or authorization, they can do so through PRAVA. Okay. So the Union Budget for 2023-24 has announced the need. So the yes, in the Union Budget, it was said that to simplify and ease and to reduce the cost of compliance for the regulated entities, there should be some kind of app that should be launched. So it has therefore been decided to develop a secured web-based centralized portal named Prava. That is the platform for regulatory application validation and authorization that will make it easier for the regulated entities to get the validation, application and authorization at a single place. Okay. Next is the central bank has approved the requirement to repatriate funds remaining idle in the foreign currency account for. So what was happening, that the liberalized remittance scheme, first of all, tell me that the scheme is regarding what? The scheme is regarding what? Outward remittances. Yes, very good. So this is the scheme for the outward remittances. Now, if the money is being taken out, is being sent out for some investment, or if the money is earned now from the investment, so the money was sent out for the investment, and from this investment there was some money that was earned. Now this money is being kept in the foreign currency account. So if you are using this money in the foreign country within 180 days for the investment purposes, then it is fine. Otherwise, after 180 days, you have to bring it back to the country, to India. Okay. But this was for the foreign countries. Like if the money is being sent for investment in some other countries. But for the International Financial Service Center that is available in India, that is the GIFT City, Gujarat International Financial Tech City. For this, it was only 15 days that were given. So if you are taking the money outside, that is, if you are taking the money to the International Financial Service Center, if you are keeping it in the foreign currency account, you can keep it only for 15 days. After that, you have to take it back. If you are taking the money out under the liberalized remittance scheme. So now it has been said that the rules and regulations under the LRS should be same. So 15 days has been replaced with 180 days. Okay. Any confusion? Okay. So the resident individuals, they may also see it has been removed, the non has been improved. Now the resident individuals have been allowed to open the interest bearing or to open any kind of foreign currency account in which they will be able to keep the foreign currency that they have they will be able to take the money out in the liberalized remittance scheme, and they can keep this money in the foreign currency account in the IFSC for 180 days. This was the rule that was provided in the LRS. Okay. As well as there is a notification that has been recently released in 2023 that before, in the LRS, in the liberalized remittance scheme, the money can be taken to the IFSC, that is International Financial Service Center, only for investment in the securities other than the securities that are released in India. So if the securities are released in India, you can invest in India only. But if some securities that are released in IFSC are not being released in India, so for those securities, you can send the money under the LRS for the investment in those kind of securities. Okay. Other than those that are issued by the entities or companies resident in India. Now it has been said that for studies abroad also, you can send the money under the LRS in the IFSC. So the remittances can be sent, or the money can be sent to the IFSC under the LRS for the studies abroad. Okay. Next is recently RBI has decided to develop a centralized web portal for the unclaimed deposits. And this unclaimed deposits will go to which? Yes, I'm getting the answer correct. That is Depositor Education and Awareness Fund. So the money will be sent to the Depositor Education and Awareness Fund. So all of the notifications we have already discussed. Now this question. Recently, the RBI So recently, the RBI proposed to put in place measures to further enhance the consumer protection and improve the grievance redressal mechanism relating to the credit information companies. So the credit information companies are also under the regulation of the Reserve Bank of India. So compensation mechanism for delayed updation rectification of credit information. So this is correct. So this is the proposal that has been made by the RBI. Provision for SMS email alerts to customers when their credit information are accessed from CIC. So that is also correct. Time frame for the ingestion of the data for the assimilation of the data for the use of the data received by the CICs from the credit institutions. So the time frame has to be provided. Disclosure relating to the number and nature of customer complaints, this has to be done in the website of CIC. Only the C, that was the correct answer. So this has not been proposed by the RBI. So this also we have discussed that the compensation mechanism should be there for the delayed updation and rectification. If the CICs are using your data, they should send you some alert, okay, that the credit information is being assessed. The time frame has to be provided for the ingestion of the data, as well as disclosure has to be done in the website regarding the number and nature of the customer complaints. Next is RBI simplified the application process for registration of core investment companies. The number of documents has been reduced from 52 to what? Yes, absolutely correct. It is 18. So nothing to understand. Just the RBI has decreased the number of documents that is required for the registration, so that there should be a smoother and hassle-free process for the registration. Okay, for the CICs, that is the core investment companies. Now coming to the framework for acceptance of green deposits. So you have to tell that which of the following statements is or are correct regarding the framework. So the framework shall come into effect from June 1, 2023. So this is the framework for the acceptance of green deposits. Okay. So the provisions of these instructions shall be applicable to the scheduled commercial banks, including the small finance banks, excluding the regional rural banks, local area banks, payment banks. And it is also, this instruction is also applicable to the deposit taking NBFCs. Green deposit has been defined as a interest-bearing deposit, because if it is a deposit, it should be interest-bearing, received by the regulated entity for a fixed period. So this green deposit is for a fixed period, and the proceeds that are received in the deposit form, in the green deposit form, that should be provided for the green finance, for the green activities or the green projects. Okay, the green deposit shall be denominated in Indian rupees only. So only the D statement was correct, all the other statements were wrong. Okay, so here the D was the right answer. So green deposits means an interest-bearing deposit that is received by the regulated entity for a fixed period, the proceeds of which are provided for the allocation of the green finance. Okay, so you have to remember the applicability also. It is applicable to all the deposit taking NBFCs, including the housing finance companies and the scheduled commercial banks, including the small finance banks only. So the green deposits, they can be cumulative FD, where you are getting the interest at the end of the maturity, or the non-cumulative deposits where you are getting the interest on the regular basis, monthly basis or yearly basis or half yearly basis. Green deposits shall be denominated in Indian rupees only. Okay. The regulated entity shall be required to allocate the proceeds to the green activities, to the green projects. You have to tell that which of the following activities is considered as green activity or green project. So I'm getting the answer E, B. Okay, Surbi is saying C. So here the correct answer is C, that is pollution prevention and control. See, nuclear power generation, of course, it is not a green activity. It will be releasing the greenhouse gases. Renewable energy projects generating energy from biomass using feedstock originating from protected areas. Now, the protected areas are the areas that are protected. There should be no human interference in the protected areas. So there should be no renewable energy projects or any kind of projects that should be made in the protected areas. Okay. So this is also incorrect. Pollution prevention and control. Yes, this is the green activity or green project. Direct waste incineration means you are burning the waste, so it is creating harmful gases. Hydropower plants larger than 25 megawatt is said to be harmful for the biodiversity. So here the C answer was the correct answer. These are the green activities or the green projects that has been given by the RBI. The exclusions you can read: the nuclear power generation, the fossil fuels, the direct waste incineration, alcohol or such kind of products, the renewable energy project that is generating from biomass using feedstock originating from the protected areas. So the renewable energy projects that are in the protected areas, that should not happen. Okay, landfill projects and the hydropower plant projects above 25 megawatt. Okay, so financing framework. The green deposits should be used. The green deposits should be used for the green activities, for the green projects. So there should be a board approved financing framework that what if the finance is not being provided for the green activity or green project. So to make sure that the financing is being provided for the green activity, green project, the board approved financing framework should be there, and there should be the third party verification and assurance also. Next is, recently RBI announced RBI announced the development of a software application called Dash for processing of application for licensing of full-fledged money changers, non-bank authorized dealers, category 2 and several other operations. So there is the authorized dealer category 1, there is the authorized dealer category 2, there is the authorized dealer category 3, and then there is the full-fledged money changers. Full-fledged money changers are only able to provide the money for they are only able to provide the sell and buy facility of the foreign currency for the private or the business trips, for the traveling purposes. Authorized dealer category 3, they are able to sell and buy the foreign currency for their own purpose, like the Exim Bank, Export and Export Bank of India. So they can do it for their own purposes. Authorized dealer category 2, they are able to undertake the current account transactions that are non-trade related. And authorized dealer category 1, they can undertake all the current account and capital account transactions. Like they are able to sell and buy the foreign currency for all the current account and capital account transactions. So here it has been said that the AP Connect is the software application that will be provided for the processing of the application for the licensing of the FFMCs, full-fledged money changers, and the non-bank authorized dealer category 2. So the authorized dealer category 1 are the banks. So they are directly connected with the RBI. The banks in the authorized dealer category 2, they are also directly connected with the RBI. But the non-banks, if they have to take the license, it becomes troublesome for them. So for this purpose, this AP Connect is the software application that has been launched, so that the full-fledged money changers and the non-bank authorized dealer category 2, they can take the easy licenses. Okay, money transfer service scheme. This is a quick and easy way of transferring personal remittances that I have told you, and the authorization as a MTSS agent can also be done through the AP Connect. So for the full-fledged money changers, for the non-bank authorized dealer category 2, for the agent, you can take the license and the authorization through this AP Connect. Okay. Next is RBI released Reserve Bank of India outsourcing of IT services directions 2023 for outsourcing of IT services. So you have to tell that for which of the following the directions will not be applicable. So I'm getting the answer B. Yes, that is absolutely correct. So the credit information companies, the primary urban cooperative bank that are present in the tier 3 and tier 4, the Exim Bank, the NAFID, all of these, they have to follow the directions, but the non-bank financial companies that are in the middle layer, that are in the upper layer, and that are in the top layer, they have to follow this. They have to follow this this direction. The base layer NBFCs do not have to follow these directions. Okay, so this is the applicability. And the tier 2 and tier 1 and tier 2 urban cooperative banks does not have to follow these directions. all India financial institutions, credit information companies, top layer, upper layer, and middle layer NBFCs have to follow these directions. They will come into effect from October 1, 2023. What else is going to come into effect from October 1, 2023? We just have studied it in the beginning of this session. What else is going to come into effect from October 1, 2023? In YouTube, in course, anyone? Which direction is going to come? Yes, very good, Snehil. Very good, Abhishek. Yes, it was regarding the card issuances. Okay, so the credit card or the debit card, that can be, the choice has to be provided to the customer. So that was the notification that is going to come live. The third, B and C, those were the points now, that multiple card networks has to be provided, as well as the customer choice should be there. So those are going to come live from October 1, 2023. Okay. So now coming to the master direction on the outsourcing of IT services. So the regulated entities can outsource their information technology services, but the regulated entities shall have a robust grievance redressal mechanism if any customer is facing any kind of issue. So the regulated entity, the bank, NBFCs, they are the one that should be able to provide the resolution to the customer. Okay, even if the problem is regarding the outsourced service, still the regulated entity has outsourced the service. So the steps has to be taken by the regulated entity. Regulated entity shall assess the impact of the concentration risk if multiple outsourcings have been done to the same service provider. Then there is the problem of the concentration risk. If one service provider is falling down, all the outsourcing that has done to the single service provider, those outsource services are also going to go down. So this is the concentration risk. Regulated entities shall ensure that their rights and obligations and those of each of their service providers are clearly defined. There should be legally binding written agreement. The engagement of a service provider based in a different jurisdiction is allowed, even though it poses the country risk. So country risk means, so here D was the right answer. So country risk means that the other country has different rules and regulations, but still the service provider can be based in a different jurisdiction. Just the regulated entities, they have to have the appropriate contingency and the exit strategies to manage such risk. The regulated entity should closely monitor the government policies of the jurisdiction. They should have the proper policies with themselves. Okay. So outsourcing of IT services, they are allowed, the regulated entities are allowed to outsource the IT services, and the regulated entities should comply with the rules and regulations, with the guidelines, with the approval, licensing, and all the other norms for the outsourcing of IT services. There should be a proper grievance redressal mechanism, and the regulated entities are responsible. Financial institutions should also put in place a risk management framework. If there should be the identification, measurement, and the mitigation of the risk that are associated with outsourcing of the IT services. Okay, robust framework has to be developed. In the case of the service provider is going down, is failing, then the business continuity plan and the disaster recovery plan should be there. Concentration risk is there when the multiple outsourcing is done to the same service provider, so that has to be minimized. Legally binding agreement should be there. Next is the provisioning requirements. So here, see, the urban cooperative banks are divided into 4 tiers. 1, 2, 3, 4. Okay. So when before December 2022, the urban cooperative banks were only present in 2 tiers. Now they are present in 4 tiers. So the other 2 tiers, what provisioning norms do they have to follow? So to make it similar, the RBI revised the norms of provisioning for the standard assets. Standard assets are the good assets. And the provisioning norms means for the good assets also, the provisions has to be kept by the banks. Okay. So for all the all the urban cooperative banks, the same norms have been provided. And as per the provisions, the direct advances that is given to the agriculture and the small and medium enterprises, they should attract a uniform provisioning requirement of 0.25% of the funded outstanding on a portfolio basis. If it is for the commercial real estate, what is the percentage? If it is for the commercial real estate for the housing purposes, what is the percentage? Yes, for the commercial real estate, the provisioning requirement is 1%. For the residential housing purposes, it is 0.75%. And for the all the other advances, it is 0.40%. So the tier 1 UCBs, they were maintaining, for all the other loans and advances, they were maintaining 0.25% of the provisioning. Now they also have to maintain 0.40% of the provisioning. Okay. So by when they will be allowed, by when they will be able, or by when they have to start maintaining the provision of 0.40%. So only the tier 1 UCBs, they were maintaining 0.25% of the provision for all other advances. So now they have to start maintaining the provision of 0.40% by when? So I'm getting the answer E from Vineet, from Shivam. So yes, E is the right answer. It is by March 31st. Yes, Sorish, Nilesh, yes, very good. So it is by March 31st, 2025 that they have to start maintaining the 0.40% of the provision. Next is, recently RBI reviewed the requirement of the counter-cyclical capital buffer. See what happens, that there are the cycles, there are the business cycles. So when the recession comes, so in the period of the recession, that is when there is the problem of the demand is going to come. That demand is going to be low. If the demand is low, the production will be low. The employment, the people will lose employment. The income will be low. Again, the demand will be low, production will be low, GDP will be low. This is the period of recession. So for the period of recession, there, the banks have to keep additional provisions. So RBI has reviewed the requirement for the counter-cyclical capital buffer. So if the RBI feels that there is the recession that is going to come, then the RBI nudge the bank that they have to start maintaining the counter-cyclical capital buffers, that they have to start maintaining extra buffers. But the RBI has said that we are not going to have the recession, so you do not have to. So the RBI has decided not to activate the CCYB. And you have to tell that which of the following. So everyone is giving the right answer. So it is D, the credit to GDP gap is actually the main indicator of the counter-cyclical capital buffer, that it should be maintained or not. So credit to GDP gap depends on the credit to GDP ratio and its long-term trend. Okay, so if the credit to GDP ratio right now is same or is near to the long-term trend, so you can say that you can see that we are going on the right path, that we are not giving too much credit that is out of our reach. Okay, so the credit to GDP gap is defined as the difference between the credit to GDP ratio and the long-term trend of the credit to GDP ratio. So if there is minimal or very less difference, so it is said that it is good for the country, because the credit to GDP ratio is near to the long-term trend that we can maintain in the long run. Okay, so this CCYB framework was put in place by RBI in 2015. It is activated when the circumstances are of the recessionary kind of thing, and the framework provides that the credit to GDP gap is the main indicator of the CCYB, that we need the buffers, additional buffers. Okay, now coming to the which of the following statements is or are true regarding the general credit card facility. So before, this was called as the general credit card scheme. Now the name has been changed by the RBI, this will be called as general credit card facility. I'm getting the answer B, that is correct. So the instruction shall apply to all the banks which are eligible to issue the cards and debit cards. So it is wrong. Now it will be called general credit card facility. So it is just a facility for the credit card. Okay. So the instruction shall apply to all the banks which are eligible to issue the credit cards only. General credit card shall be issued in the form of credit card. True. Individual entities sanctioned the working capital facilities for the farm entrepreneurial activities. So the Kisan credit card is present for the farm, for the agriculture purposes, and the GCC facility is provided for the non-farm entrepreneurial activities. Okay, so this you have to remember. So these are the 2013 guidelines, that before the GCC, under the GCC scheme, the smart card, debit card, and different kind of loans were provided, and there was no ceiling on the loan amount. But now the scheme has been changed. Before it was the credit card, general credit card scheme. Now it has been changed to general credit card facility, and only the credit card should be issued under this facility. It is for the non-farm entrepreneurial activities only. Okay, so these are the entities that are able to provide the credit cards. So payment banks cannot provide the credit card because the payment bank cannot provide the loans. State cooperative banks and the district central cooperative banks can also not provide the credit card. Okay. Next is draft circular has been released for the fair lending practice, penal charges in loan accounts. So you have to tell that which of the following is not an instruction issued for adoption under the draft circular. So the fair lending practice penal charge, in this, the main theme was that the penal interest will be removed. The penal interest should be removed. So the RE shall not introduce any additional component of rate of interest. This is true. Penalty, if charged, it should be charged only in terms of penal charges. That is only in term of amount. If the credit risk profile of the borrower is changing, if you are becoming more risky, so you have to pay more interest. So yes, the risk premium should also increase. Whenever reminders for payment of the installment has to be sent, the penal charges should also be communicated, so that the other person is afraid that if I do not pay on time, this much charges extra I will have to pay. The penal charges in case of loans sanctioned to the individual borrowers for purposes other than business shall not be higher than the penal charges that is applicable to non-individual borrowers. So that is, the penal charges that is taken from the individuals should not be greater than the penal charges that is taken from non-individual borrowers. Okay, so this is the applicability. It is applicable to all the commercial banks excluding the payment bank. It is applicable to primary urban cooperative banks, NBFCs, all India financial institutions. Now you have seen that the regulated entity shall not introduce any additional component in the form of rate of interest. If non-compliance is happening, if default is happening, then penal charges should be applied. There should be no capitalization of penal charges. That is, no further interest should be compounded on the penal charges. It is not like that you are adding the penal charges to the loan amount and then in total you are taking the interest. No. On the penal charges, there should be no interest that should be charged. Appropriate credit risk premium. If the credit risk is increasing, more premium can be taken. Quantum of penal charges should be proportional to the default. The more default a person is making or someone is making, the more charge can be levied. The penal charges in case of loans sanctioned to individual borrowers for purposes other than business shall not be higher than the penal charges that is applicable to non-individual borrowers. Okay, so the penal charges, the conditions regarding the penal charges shall be clearly disclosed by the regulated entities in their website in the key facts statement where all the information is given. Whenever reminders for the payment or the installment has to be sent, the applicable penal charges should also be communicated. The clearly laid down board approved policy should be present for the penal charges, and the operationalization of the penal charges will be done after the review has been done by the RBI. Okay. Now coming to the next question, that the KYC norms were updated, were amended, and the beneficial owner, as per the new norms, the beneficial owner is who? So I'm getting the answer is A, that is correct. For opening an account, so if I'm going to a bank account, I want to open an account. If I'm doing anything negative using that account, that is, I am doing the money laundering or something, I will be caught. But if a company is opening a bank account, so who will be responsible? Who should be responsible? So in the case of the legal person, that is the company trust, who is not a natural person, the beneficial owner shall be identified. That person will be caught if there is any money laundering that is happening through the bank account. Okay, so the beneficial owner is the one that is having controlling ownership interest, that is the ownership of entitlement to more than 10% of the shares or capital or profits of the company. So that will be the beneficial owner. If any wrongdoing is happening through this bank account of the company, that person will be caught. Okay. So before, the percentage was 25% in the case of companies and 15% for the trust. Now this has been decreased to 10% for both the companies and trust. Okay. So the amendment to the master direction on the know your customer was brought so that these norms of the KYC should be aligned with the prevention of money laundering maintenance of records rules 2005. So Prevention of Money Laundering Act was released in 2002, and under this act there is the prevention of money laundering maintenance of records, so that the records can be maintained, and in the case of money laundering the person can be caught. As well as the Financial Action Task Force, the recommendation is usually given by this intergovernmental body that is established in 1989 by the ministers of the member jurisdictions. So there are many recommendations that have been given by the FATF. So the banks are advised to get aligned with these recommendations also, okay, so that the money laundering can be reduced. So these are the definitions that was given in this scenario for this case, okay. Like for when the norms have been updated for the KYC, when the amendment has been happened, so the shell bank has been defined. They are the banks that have no physical presence in the country, and in their name there is many transactions that are happening. Correspondent banking. So correspondent banking is the provision of the banking service by one bank to another bank. So respondent bank is taking the services, and there is some correspondent bank in some other country that is providing these services. So there are other definitions that you can read, very easy. Okay. Next is, see, in case of the suspicious, if you are suspicious on any customer, you need not do the customer due diligence, because if you take the information from the customer, he will know that something is suspicious, the bank is getting suspicious on me. Rather than, you directly can file the suspicious transaction reporting with the Financial Intelligence Unit India, which is the department of which is under the Department of Revenue, Ministry of Finance. Okay, so you can directly do the suspicious transaction reporting. Now coming to the March 2023. So RBI, in consultation with the Government of India, has recently decided that the limit for the ways and means advances for the first half of the financial year 23-24 to will be what? So it is going to be 1,50,000 crore. Okay. So the ways and means advances are the small term loans that is given to the government, to the union government, and to the central government and to the state governments. For the central government, the limit is 1,50,000 that has been provided by the RBI in consultation with the Government of India. So this is the additional information. The government can avail the cash immediately for 90 days, and the government has to return it within the 90 days. The interest rate that is charged on this ways and means advances is the repo rate. So if the repo rate is 6.5%, that will be the interest rate that will be charged on this ways and means advances. If the overdraft is happening, that is you are the government is not able to pay back the money in 90 days, then plus 2% is that is 8.5% of the interest the government will have to pay. Next is, which of the following commercial banks was recently excluded from the second schedule of the RBI Act of 1934? So it was Abu Dhabi Commercial Bank, PJSC. Okay. So because this is the only bank in a long time that has been completely removed from the second schedule of the RBI Act. Okay. So usually the commercial banks are in the second schedule of the RBI bank. Now, recently RBI launched the mission Har Payment Digital on the occasion of the Digital Payment Awareness Week. The theme of the campaign is, yes, everyone is giving the right answer. So the Digital Payment Awareness Week was launched, and the theme of this week was Digital Payment Apnao Auron ko bhi sikhao. While digital payments, so Har Payment Digital was a mission that was launched in the Digital Payments Awareness Week 2023, and the message that was spread through this Har Payment Digital was digital payments apnao, auron ko bhi sikhao, adopt the digital payments and also teach others. So this was the Har Payment Digital, that is the mission that was launched with the aim of making every citizen in the country a user of digital payments. Okay. Now you have to tell that RBI observed Digital Payments Awareness Week. Under this week, the payment system operators were to adopt the villages across the country and convert them into digital payment enabled villages. So the answer here is 75. So the payment system operators, 75 digital villages is the name of the program. So the payment system operators, they had to adopt 75 villages across the country and had to convert these villages into the digital payment enabled villages. Okay. Regional offices of the RBI also conducted the awareness outreach programs, which also formed the part of Jan Bhagidari events under the G20 theme of promoting the digital public infrastructure during the Indian presidency to promote the acceptance and the use of digital payments. Okay. So there were the 75 villages that had to be adopted by the payment system operators under the 75 digital villages program. Okay. Next is Reserve Bank of India and the Central Bank of United Arab Emirates signed an MOU. Which of the following statements is or are incorrect regarding the MOU that you have to tell? Under the MOU, the two central banks will collaborate on various emerging areas of fintech, especially CBDC, so that is correct, and explore the interoperability between the CBDCs, correct. CB, UAE and RBI will jointly conduct the proof of concept and the pilots of bilateral CBDC bridge to facilitate the cross-border CBDC transaction of the remittances. So that is not correct. Here the bilateral should be there. So the facilitation of the cross-border CBDC transaction should happen for the remittances and trades. The CBDC should be utilized. The central bank digital currencies should be utilized in between the two countries. The RBI and the CBUAE signed an MOU in Abu Dhabi to enhance the cooperation and jointly enable innovation in financial products and services. So here the E is the right answer. Okay, I don't think that there is any explanation that is needed. The central bank of UAE and the Reserve Bank of India came together, signed an MOU so that the CBDCs, especially the interoperability of the CBDCs, can be increased so that the remittance transfer can happen through the central bank digital currency and the trade can be paid through the central bank digital currency. Okay, and it happened in Abu Dhabi. Now coming to the Shaktikanta Das, governor of RBI, laid the foundation stone for the establishment of the Greenfield Data Center and the Enterprise Computing Cybersecurity Training Institute in Bhubaneswar, Odisha. So now coming to the next question, RBI released the draft guidelines on minimum capital requirements for market risk under Basel III for comments of stakeholders and members of the public. Which of the following statements is or are correct? Incorrect, sorry. A trading book. See, in this guidelines, what happened that the trading book and the banking book was suggested that there should be a boundary between the trading book and banking book. The trading book will be related to the market, will be related to the financial instruments that are present in the financial markets. Okay, so if there is any risk that is happening in the market, okay, if there is any volatility in the market, so that will be market risk, and that will be for the financial instruments. The banking book will have the loans and the deposits of the bank. The loans have the interest risk. Okay, and they have the risk that what if the loan is not coming back. So the new norms draw a boundary between the banking book and the trading book. The trading book is the portfolio of the financial instruments that is held by a bank or brokerage. The new guidelines ban the short positions on any instrument except in derivatives and the central government securities. Okay, so C is the correct answer here. So a boundary has been made in between the banking book and the trading book. In the banking book, there is the market risk. Sorry, in the trading book, there is the market risk, because in the trading book, there are the financial instruments that are present in the market. If there is volatility in the market, all the financial instruments will have some kind of risk. Okay. There are the specific risk and the general market risk in the trading book, because specific risk means one bond or one share, it can be risky. Okay, the particular bond, the particular share can be risky. So there are the specific risk and there are the complete market risk. Then suddenly a dip is coming in the market due to something that has happened in US or UK. So that is the market risk, general market risk. Okay. For the specific risk, for the general market risk, 9% of the each for the specific risk, and for the general market risk, 9% each of the core capital has to be maintained. Okay. This is the capital requirement. Okay. Specific risk is for each security. General market risk is the risk in the market. Okay. For each kind of risk, the capital requirement is 9% of the core capital. The banking book is the book in which the loans and the deposits are mentioned. And this book is subject to the credit risk. That what if the money is not coming back that has been provided for the loan. The new guidelines ban the short position on any instrument except the derivatives and the central government securities. Short position means that you are selling the stock that you do not own. So you are selling the stock that you do not own. Okay. This is happening because in the T+1 day, the trade settlement has to happen. So today you are doing the trade. You are saying that tomorrow I will sell the stock. So the trade is happening today. You are selling, actually you are selling it today because the trade has been signed today that you are going to sell this stock. You are going to provide this stock tomorrow. So by the end of the day, you have to buy the stock so that you can provide the stock tomorrow to the buyer. Okay. So the settlement will happen tomorrow. The trade has happened today. So you are actually selling, you are actually doing the trade of the stock that you do not own. The investors who sell the short believe that the price of the stock is going to go down. So that's why you will buy when the price has gone down, and you will be able to sell on the price that has been decided. Okay, because the trade has also actually happened. So if the price drops, you can buy the stock at the lower price and make a profit by providing the stock tomorrow to the person. Okay. And this the document has already been signed, the contract has already been made, so the other person will also have to buy the stock. Next is the RBI notified regarding the instructions for the revised. So what has happened that the RBI has notified that the instructions has been revised for the urban cooperative banks, the net worth and the capital adequacy. So you have to tell that which of the following statement is incorrect. So UCBs that do not meet the minimum net worth requirement shall achieve the entire stipulated minimum net worth on or before March 31st, 2028. So this is correct. Okay. So if they are not able to meet the minimum requirement, they have to meet it by March 2028 because the minimum net worth requirement has been changed. Tier 1 UCBs operating in a single district shall have a minimum net worth of rupees 2 crore. Correct. Tier 1 UCBs that shall maintain a minimum CRAR of 9%. Yes, very good. So this is the wrong statement because 9% is the CRAR that the tier 1 UCBs have to maintain. Okay. So here the C is the correct answer. So the tier 1 UCBs that are operating in a single district shall have minimum net worth of rupees 2 crore. And all the other UCBs shall have the minimum net worth of rupees 5 crore. So if a UCB is operating, if a tier 1 UCB is operating in more than one district, then they also have to maintain the net worth of rupees 5 crore. And these instructions have come into effect from March 31, 2023. The 4 tiers, there are 4 tiers of the UCBs, tier 1, tier 2, tier 3, and tier 4. So you need to remember that the tier 1 UCB, all the tiers are decided on the basis of the deposit size. So try to remember the deposit size. Okay. The tier 1, if the UCBs are not able to maintain, if they are not meeting these criteria, then they have been provided the date that is on or before March 31st, 2028. They have to meet 100% of the net worth. And 50% of the net worth they have to maintain, they have to meet by on or before March 31st, 2026. So tier 1 UCBs shall maintain a minimum CRAR of what percentage? You have already told this, it is 9%. Okay. So remember this very clearly. So minimum CRAR for the tier 1 is 9%, minimum CRAR for 2 to 4 UCBs. Tier 2 to 4 UCBs have the minimum CRAR of 12%. Here is the timeline that has been given that by March. See, tier 1 UCBs, all the UCBs had to maintain 9% of the CRAR. So they were already maintaining. So for the tier 1, there is no timeline that has to be provided. But for tier 2 to tier 4, they were maintaining 9%. Now they have to increase to 12%. So that's why the timeline has been given. So Sovana is asking, what is thrift society? So see, the thrift societies are the saving societies. Okay, the government employees, the public sector undertaking employees, they can come together and they can save. So these are the thrift societies. Okay. Now coming to the Jan and Feb 2023. So the RBI has been publishing a composite RBI DPI since January 1, 2021 to capture the extent of the digitization of payments across the country. Which of the following is the base period for the index that you have to tell? So March 2018, yes, that is absolutely correct. So this is the base for the Reserve Bank of India Digital Payment Index. Okay. So here, the RBI has been publishing a composite Reserve Bank of India Digital Payment Index since January 1, 2021. Okay. And the base year is March 2018. There are 5 broad parameters of the Digital Payment Index. These are the payment enablers, payment infrastructure, demand side factors, supply side factors, payment performance, and consumer centricity. So there are the 5 broad parameters of the Digital Payment Index. Okay. And the base year is March 2018. Now coming to the next question, RBI issued Master Direction, Reserve Bank of India, acquisition and holding of shares or voting rights in banking companies, Direction 2023. As per the guidelines, the promoters are allowed to hold. Here the answer is 26%. So see, the RBI brought the master direction that the shares or the voting rights in a banking company should be well diversified. Okay, and it should be in the hands of the well-managed people. So it should be in the hands of the fit and proper criteria. So the major shareholder should be fit and proper. And as per the master direction, any person, if the person wants to hold more than 5%, 5% or more than 5% of the share or the paid up share capital or voting rights in banking company, then they have to take the permission from the RBI. So if anyone wants to hold 5% or more than 5% of the shares, then they have to take the banking rights from the Reserve Bank of India. So the decision of the Reserve Bank to accord or deny is as per the Reserve Bank of India. They can decide to accept or deny. So here, for the non-promoters, 10% of the paid up share capital or voting rights of the banking company. So this is the limit of shares in a banking company. So for an individual, 10% is the limit of the voting rights or the paid up share capital. Non-financial institutions, financial institutions, directly or indirectly, they are connected with the large industrial houses. Then for them also 10% is the limit. So if the financial institutions, if they are directly or indirectly connected with the large industrial houses, they should not have much shares, holding of the shares, because then they will only care about the large industrial houses and they will give the loan. Means they will have too much power in the bank. So they should not have much shares. That's why 10% is the limit for them. And the financial institutions that are owned by the individuals, or more 50% of the financial institutions, if it is owned by the individuals, for them also the limit is 10%. 15% of the paid up share capital or voting rights of the banking company in case of financial. So 15% is the limit of the shareholding for the financial institutions that are excluded from the above criteria, like they are not connected with the large industrial houses, or they are not owned, majority is not owned by the individuals, then they can have 15% of the shares. And the supranational institutions, the public sector undertaking, the central government, state government, they can have more than 50% of the shares in the, they can have 15% of the share in the banking companies. Okay. So 15% is the limit. Promoter, that is the establisher of the bank, they can have 26% of the shares in the company if after the completion of the 15 years. Okay. So after the completion of 15 years, 26% is the limit for the promoters who have established the company. So if the shareholding is more than 10% and it is less than 40%, for the first 5 years, the complete shares has to be locked down. Okay, so in case of a person permitted by the Reserve Bank to have a shareholding of more than 10% and less than 40%, the shares acquired shall remain under the lock-in period for the first 5 years from the date of acquisition. If you have more than 40% of the shares, then like the promoter can have more than 40% of the shares if the 15 years have not completed. Okay, so if you have more than 40% of the shares, then the only 40% of the shares will be in the first lock-in period for the first 5 years. Okay, so this is the understanding. Now coming to the next question. So here, recently in January 2023, the RBI issued its list of domestic systemically important banks. Okay, you have to tell that which of the following domestic systemically important banks has to maintain 0.60% of the additional common equity tier 1, as well as tell me that how the domestic systemically important banks are selected. On what basis the domestic systemically important banks are selected? Yes, size, substitutability, interconnectedness. So first of all, the domestic systemically important banks. So they are, yes. So it is on the basis of size, interconnectedness, substitutability, and the complexity. See, the banks have to maintain the common equity tier 1, okay, with themselves. But the domestic systemically important banks, as they are very important for the country, so they have to maintain some additional common equity tier 1. So State Bank of India has to maintain additional 0.60%. ICICI Bank and SDFC Bank have to maintain extra 0.20%. Okay. So the banks with a size of over 2% of the GDP are selected to become the domestic systemically important banks. So if they are following the 4 criteria, then they become the domestic systemically important banks. Okay. Now coming to the annual report of the ombudsman scheme. So the annual report of ombudsman scheme, this is the report. So first of all, the integrated ombudsman scheme of the Reserve Bank of India, this was launched in 12 November 2021 by the by the Prime Minister of our country. Okay, and this is the so try to answer this first question on the report. So the annual report of the ombudsman schemes for the period of 2021-22 has been released. Which of the statement is incorrect regarding the scheme? So the ambit of Reserve Bank Integrated Ombudsman Scheme 2021 was extended to include the non-scheduled urban cooperative banks with deposits of rupees 50 crore and above. So this is correct. It was launched on November 12, 2021. That is correct. Reserve Bank Integrated Ombudsman Scheme 2021. Under this, the CRPC, that is Centralized Receipt Processing Center, this was established in Chandigarh to receive the complaints through the email and physical mode from across the country and handle the initial scrutiny. So the Centralized Receipt and Processing Center, it receives the complaints from all the ombudsmen and everyone. So like whatever the complaint is coming, that will first go to CRPC, and the CRPC will allot the complaints to different segments. Okay. A contact center to assist the compliance in lodging their complaints. So contact centers are the centers that can help the people, the customers that are lodging the complaint by providing them the information regarding the grievance redressal mechanism, that how they can resolve their grievance. And this is provided in, the information is provided in 10 regional languages. So D is the wrong statement. Okay. So here you can see that we have discussed. So it is provided. The contact centers are present in the contact centers. They assist the compliance in lodging their complaints in 10 regional languages. The service is provided. The awareness messages are provided. Okay. Apart from Hindi and English. The CRPC is the Centralized Receipt Processing Center that is established at RBI Chandigarh. So the CMS is the complaint management system portal through which the complaints come in, as well as the complaint also comes in through the CP grams, that is of the government of our country. So the centralized public grievance redressal and monitoring system. This full form, try to remember it. It is the centralized public grievance redress and monitoring system. This is an online platform that takes the grievances regarding the public authorities on any subject related to service delivery. Okay. Now coming to the next question. So recently the Reserve Bank of India released the annual report of the Ombudsman scheme. Okay, so you have to tell that which of the following is incorrect as per the annual report. So the volume of complaints received under the Ombudsman scheme or under the Consumer Education and Protection cells during the year 2021-22 increased by 9.39%. This is correct. Complaints relating to digital mode of payment and transactions were the highest, and they were constituting 42.12% of the total complaints. So out of the total complaints, 42.12 were the complaints that were relating to the digital modes of payment and transactions. The rate of disposal of complaints by Reserve Bank Integrated Ombudsman improved to 97.97%. 63.63% of the maintainable complaints were resolved through mutual settlement. So these are the data points that you can understand. You do not have to remember the numbers, just try to remember the percentages. Now coming to which of the following has released this report, very easy. It is the Consumer Education and Protection Department that has released the report. Okay. Now coming to the next question. So the way forward, these are the way forward, that is the enhancing the efficiency and the ease of usage of the complaint management system. The extension has to happen of the Reserve Bank Integrated Ombudsman Scheme. Internal Ombudsman Scheme has to be extended to more regulated entities and such and such. Now coming to the next question. That is recently upon classification of urban cooperative banks into 4 tiers under the revise. So the urban cooperative banks have been divided into 4 tiers. Okay, so the limit on the housing loans sanctioned by the urban cooperative banks to individual borrowers is 60 lakh for the tier 1 UCBs, and it is 140 lakhs for the urban cooperative banks that are categorized in tier 2 to tier 4. So there is the limit on the housing loan that is given to the individual. 60 lakh is the limit for the tier 1 UCBs. 140 lakh is the limit for the urban cooperative banks that are categorized in tier 2 to tier 4. Okay. RBI recently announced the opening of the 4th cohort under the regulatory sandbox. Which of the following is the theme of 4th cohort? A, very easy. The A is the theme. Okay, so themes you have to remember. For the first cohort, the theme was retail payments. Second cohort, the theme was cross-border payments. Third cohort, the theme was MSME lending. Fourth cohort, the theme was prevention and mitigation of financial frauds. Okay. Now coming to the sovereign green bonds. So the sovereign green bonds has been launched by the Reserve Bank of India for mobilizing by the government of India. Okay, so the sovereign green bonds launched by the government of India for mobilizing the resources, for collecting the resources for the green infrastructure. So the sovereign green bonds will be issued through uniform auction price. That is correct. So 5% of the notified amount will be secured, will be reserved for the retail investors. Sovereign green bonds will be eligible for the repo transactions because the sovereign green bonds are what? They are the government securities because they are issued by the government of India. They are issued on behalf of government of India. So they are the government securities. So that's why they can be kept as the collateral in the government in the repo transactions. Sovereign green bonds will be reckoned as eligible investment for the SLR purposes. Statutory liquidity ratio under this, gold can be kept, cash can be kept, and government securities can be kept. So yes, the SGRBs, they are the eligible investment under the SLR purpose. SGRBs, that is the sovereign green bonds, will not be eligible for trading in secondary market. This is wrong. They will be eligible. They will be eligible for trading in secondary market. So we have discussed everything. I don't think there is any requirement. If there is any confusion, tell me. Any confusion? Should I move forward? Tell me fast. Till now, is there any confusion? Okay. Coming to recently, in January 2023, RBI recently advised the market participants to utilize the price or yield range setting facility provided on the dash. See, sovereign green bonds, they are the sovereign bonds, they are the government bonds, and that's why they are the government securities. They are kept as the collateral. They can be kept as the collateral in the repo transactions, because in the repo transactions, the banks are taking loan from RBI and the banks are giving the collateral to the government. So the government securities can be used in the repo transactions, and it can be used in the SLR. That is why the SGRB can be used in the SLR. Okay. Okay, I'm getting the answer E Kuber here. So yes, RBI recently advised that there is the fat finger mistake that is happening. The error is happening. You are typing in more numbers than you want to bid. So why don't you just set the range when the range setting is provided in the E Kuber system? So this has been said by the RBI. RBI has advised the people, the users to use the price yield range setting in the eKuber platform. So they can set the price or they can set the yield in the range. Okay. So the facility allows the market participant to define a range that is the maximum and the minimum value for the bids they intend to submit in an auction. So eKuber is the core banking solution platform of the Reserve Bank of India, which includes the commercial banks, scheduled urban cooperative banks, primary dealers, insurance companies, and provident funds and such. Recently, in February 2022, RBI conducted the FLW 2023 from February 13 to 17, 2023. RBI has been conducting the Financial Literacy Week since when? So it has been conducted since 2016. Recently, in February 2023, RBI has organized its second global hackathon, Harbinger 2023 Innovation for Transformation. The theme of the hackathon for 2023 is Inclusive Digital Services. So this is the theme for the hackathon. The theme of the previous hackathon was Smarter Digital Payments. Okay. So here, the Harbinger 2023, which is a global hackathon, which was the global competition. This was conducted in India. Okay, this was for the inclusive digital services. That aim was to develop the solutions that have the potential to make the digital financial services accessible to the differently abled, to facilitate the efficient compliance, to extend the reach of the central bank digital currency, and enhance the scalability of the blockchains. So this was the aim of the Harbinger 2023 Innovation for Transformation. These were the problem statements that were provided. The first global hackathon happened in 2021 with the theme Smarter Digital Payments, aiming to shape the future of payment system. So this is the second global hackathon that happened in India. So this is the Harbinger 2023. Okay. It has been decided to allow the access to UPI to foreign nationals and NRIs visiting India. Which of the following statement is incorrect in the regard? So the UPI system has been provided through the PPIs, prepaid instruments, that is through the wallets, to the foreign nationals, to the NRIs. They can scan the UPI QR code and they can pay through the wallets. So to start with, this facility will be extended to the travelers from the G20 countries at the select international airports. Okay, so to start with, the facility was extended to the travelers, was provided to the travelers from the G20 countries. The UPI facility extended to travelers is for their merchant payments and person-to-person payments. So it was only for the merchant payments. It was not for the person-to-person payments. It was provided to the foreigner nationals. It was provided to the NRIs so that they can do more expenditure and they can use their money easily without any fear, and they can pay to the merchants. Banks and the non-banks that are permitted to issue the PPIs can issue the INR denominated full KYC. So yes, the full KYC should happen to the of the PPIs, and the merchants can only take INR. The thelawalas or the shopkeepers, they cannot take US dollars. They can only take INR. So the PPI should only have INR. The amount outstanding, the amount that can be kept in the full KYC PPIs shall not exceed rupees 2 lakh at any point of time. Okay, so these are all true. So the banks and the non-banks were permitted to issue the PPIs, can issue the INR denominated full KYC PPIs to the foreign nationals or the NRIs that were visiting India. The PPIs shall be issued after the physical verification, that is the full KYC that has happened, full know your customer that has happened. Okay, and the record has to be maintained regarding this. The PPIs can be issued in the form of wallets linked to the UPI, so that the through the QR code the payment can happen. Loading and reloading of the PPI shall be against the receipt of foreign exchange. When foreign exchange has been received in cash, then or through the any payment instrument, when the foreign exchange has been received, then the PPI should be loaded with the INR. Okay, the conversion of the Indian rupee can only be carried out through the authorized dealer, because they can buy and sell the foreign currency. Amount that is outstanding in the PPI should not be more than rupees 2 lakh. Now coming to the next question. As per the press release of RBI, the extending UPI for inbound travelers, the UPI facility, the PPI wallet linked to UPI facility has been provided to the eligible travelers by which of the following banks? So it is by the IDFC First Bank and the ICICI Bank. Okay, so this facility was provided by the ICICI Bank, IDFC First Bank to non-bank prepaid payment issuers, that is the Pine Labs and the Transcorp. Okay, next is regarding the GSL, government securities lending. So recently Reserve Bank of India released the Reserve Bank of India Government Securities Directions 2023. So the draft guidelines has been released. As per the directions, which of the following statements is or are incorrect, that you have to tell? A is correct. Government securities are the government securities issued by the central government, excluding the treasury bills, shall be eligible for lending or borrowing under the GSL transaction. Okay, so the government securities that are issued by the central bank, excluding the treasury bills, they shall be eligible for the lending or borrowing under the government security lending transaction. The government securities, see, government security lending means that the buying and selling was happening till now, but there was no market for the lending or the borrowing of the government securities. This market has been created by the RBI now, that the government securities that is issued by the central government, excluding the treasury bills, they shall be eligible for lending or borrowing under the GSL transaction. Government securities that is issued by the central government, including treasury bills and the state governments, shall be eligible for placing as collateral under the GSL transaction. So for the collateral, the government securities can be kept, the dated, like the long-term securities, or even the treasury bills can be kept, as well as the state government securities can also be kept. The GSL transactions shall be on the delivery versus delivery basis. I am giving you the lending, I am lending you the government security, and you are giving me the collateral. Okay, all GSL transactions shall settle through the clearing corporation of India or any other central counterparty approved by the RBI. So here the B and the D statements were wrong, and that's why E is the answer here. So the government security, I hope you all know, the government securities are the securities, the debt instruments usually that are released by the government of India. The government, central government securities are usually the dated securities and the treasury bills. The government securities that are issued by the central government, that is the dated securities, they are the only eligible instrument for the lending or borrowing under the GSL transaction. The treasury bills are excluded from this. Government securities that is issued by the central government, including the treasury bills and the state governments, shall be eligible for placing as collateral. Eligible entities, eligible participants that are allowed under this lending and borrowing are the scheduled commercial banks, primary dealers, urban cooperative banks, regulated entity, listed corporate, unlisted corporate company, which has been issued special securities by the government of India, all India financial institutions and such. Okay. So the GSL transactions shall settle on the delivery versus delivery basis. It can happen on the trade day, that the settlement is also happening on the trade day, or the trade can happen. Like the contract has been signed today and tomorrow the settlement will happen. The CCIL and the other central counterparty approved by the Reserve Bank of India. So all the transactions under the GSL, all the transactions shall settle through the CCIL and the other central counterparty approved by the Reserve Bank. Okay. So the minimum period for the lending and the borrowing is overnight. That is 1 day. And the maximum period is what that you have to tell. Achha. See, lending means that you are lending it. Like you are lending me 100 rupees. While I'm giving you the collateral of my property. Let's say you are giving me 10 lakh rupees. And I'm giving you the collateral, that is my property documents. So collateral is like what you are keeping against the amount that has been lent. Okay. So maximum period is of 90 days. So as per the Reserve Bank of India directions, the minimum period for the lending and the borrowing is 1 day and the maximum period is 90 days. So now coming to the next question, which of the following statements is incorrect regarding the recently launched UPI Pay Now linkage? So see, UPI is of India. UPI is of India and the Pay Now is of Singapore. So there is the UPI Pay Now linkage that has happened. They both are the real-time payment settlement systems, and only the person-to-person or the peer-to-peer settlement can happen through this UPI Pay Now linkage. There is a daily transaction limit of rupees 60,000 in a day for undertaking the cross-border remittance transactions through the UPI Pay Now linkage. So that is correct. The State Bank of India, the Indian Overseas Bank, Indian Bank, and the ICICI Bank will facilitate both inward and outward remittances. That is correct. While the Axis Bank and DBS Bank, they are only allowed to have the inward remittances or do the inward remittances. For Singapore users, the service of inward and outward remittances will be available through DBS Singapore and Liquid Group, that is a non-bank financial institution. The funds that is held in bank accounts or e-wallets can be transferred to or from India using just the UPI ID, mobile number, or virtual payment address for the person-to-person transaction. So only the B statement was incorrect. Okay. So I don't think there is any confusion that is of this news article. The Pay Now is of Singapore, the UPI is of India. They both have got interlinked. They both have been connected. They both have been linked. And now the person-to-person transactions can happen. There are the, to begin with, State Bank of India, Indian Overseas Bank, Indian Bank, and ICICI Bank can do the inward-outward remittances. Axis Bank, DBS Bank, India, they can only do the inward remittances. The limit is rupees 60,000 per day, or a sovereign. The Singapore dollars, the limit is the Singapore dollar 1,000. Okay. Now coming to the UPI Pay Now linkage transactions. So person-to-person remittance transfer is happening. This will be done through the liberalized remittance scheme. So the purpose of maintenance of relatives abroad, or like if you are sending the money abroad, so this kind of thing can happen under the liberalized remittance scheme, because for the outward remittances, this should be allowed under the liberalized remittance scheme. Okay. Liberalized remittance scheme, this will be discussed in the scheme session. So liberalized remittance scheme, we already have discussed many a times that this is for the outward remittances. The limit in this scheme is of the US dollar 250,000. Okay. So the Monetary Authority of Singapore and the Bank of Thailand launched the linkage of Singapore Pay Now and Thailand from Pay. This was the first linkage of such kind. And the second linkage has been done with India. But this Pay Now UPI linkage is the first in its world to be based on the cloud-based infrastructure, and the participation of the non-bank financial institution has happened in this kind of linkage. Okay. So remember that in the case of the world's first, what is the case? World's first means that such linkage is based on the cloud-based infrastructure, and the participation the participation is also done by the non-bank financial institutions. So in this case, it has become the world's first such linkage. Okay. Coming to the December one, and then we will discuss some questions on the financial stability report. Okay. Recently, the Reserve Bank of India medium-term strategy framework named Utkarsh 2.0 for the period of dash was launched by Sri Shaktikanta Das. So Utkarsh 2.0, is a short-term framework, is a medium-term framework, is a long-term framework, is an annual framework? So which kind of framework is it? Medium-term framework. Very good. It is launched by the RBI. It shows the path to the RBI for the future, we can say. So it was launched for the 2023-25 period, and this is the medium term framework that is a living document that sets out the course that the RBI has to adopt to deliver the excellence in its work. Okay. There are the visions that we will discuss of Utkarsh 2.0. The first Utkarsh, like before this Utkarsh 2.0, there was the Utkarsh 2022 that was launched in July 2019. So this also you have to remember, okay? So there are the 5 values on which the Utkarsh 2.0, the Utkarsh 2.0 tells about the 5 values. So the Reserve Bank of India is committed itself to follow the 5 values that will guide the organization decisions and the employee actions in pursuit of the bank's core purpose. So if you are going to become the Reserve Bank of India officer, so you will also have to adhere to these values. So these are the values. So in this way, you can remember that the public interest, the bank in its action and the policies would seek to promote the public interest and the common good. Integrity and the independence in the bank itself, the bank should maintain, the Reserve Bank of India should maintain highest standards of integrity and independence through openness, trust, and accountability. Responsiveness and innovation, the bank would seek to be a dynamic organization that is responsive to the public need, fostering innovation, spirit of inquiry. That is, there should be innovation and responsiveness that should be there. Diversity and inclusiveness, there should be diversity that is present in the bank itself, in the Reserve Bank of India. That's why the Reserve Bank of India is conducting such a exam in a huge scale, so that the RBI can have the diverse kind of people in the organization. Introspection and pursuit of excellence, the bank is committed to self-appraisal, introspection, and the bank has to see that what it is doing right and what it is doing wrong. So these are the 5 values that you have to remember. Core purpose is to foster the monetary and financial stability conducive to sustainable economic growth. So there should be the monetary and financial stability that is good for the sustainable economic growth of the country, to ensure the development of an efficient and the inclusive financial system. The mission, there are the 3 missions to promote the economic and financial well-being of the people of India in terms of price and financial stability. The fair and universal access to the financial services should be there, as well as robust, dynamic, and responsive financial intermediation infrastructure. That is, the regulated entities should have a proper infrastructure that is robust, dynamic, and responsive. The 6 visions are excellence in performance of its function. So the vision of Reserve Bank of India, that the Reserve Bank of India should pursue the excellence in its performance. There should be strengthened trust of the citizens and institutions on the RBI. In the RBI, then only they will do what the RBI is saying. Okay, what the RBI is indicating for the betterment of the economy. Enhanced relevance and significance of the Reserve Bank of India in the national and the global roles. Transparent, accountable, ethics-driven internal governance, best-in-class, environment-friendly digital and physical infrastructure the RBI should have, so that it can protect the data that it has, and it should have the best physical infrastructure also. Innovative, dynamic, and skilled human resources. Okay, so these are the visions that we have discussed. The vision 1 has the maximum strategies, that is to complete the excellence in the performance of the function of RBI. There are 24 strategies that have been mentioned in Utkarsh 2.0. Now coming to the next question, RBI decided to migrate the fraud reporting module, Central Payments Fraud Information Registry to Reserve Bank's Advanced Supervisory Monitoring System. So first of all, what is this Reserve Bank's Advanced Supervisory Monitoring System? So I'm getting the answer C. Yes, that is Daksh. Very good. So it is to streamline the reporting, enhance the efficiency to automate the payments fraud management process for the fraud reporting module. The fraud reporting module has been migrated to Daksh, that is the Reserve Bank's Advanced Supervisory Monitoring System. So RBI had operationalized the Central Payments Fraud Information Registry in March 2020 with reporting of payment frauds by the scheduled commercial banks, non-bank prepaid payment instrument. Now this fraud reporting module has been migrated to Daksh, that is more advanced. The migration will be effective. This has been effective from January 1, 2023. So the online screen-based reporting option for requesting additional information, all these kind of additional functionalities has been provided in Daksh. Coming to the next question, as per the financial stability report, the CRAR and the common equity tier 1 ratio of the scheduled commercial banks rose to historical highs of, so I'm getting the answer E, that is absolutely correct. So the CRAR of the scheduled commercial bank was 17.1% in March 2023, and the CET1, that is the common equity tier 1, was 13.9% for the scheduled commercial banks. Next is, according to the financial stability report, the provisional coverage ratio was maintained by the scheduled commercial banks at dash in March 2023 with profit after tax at dash for 2022-23. So I'm getting the answer C here. That is correct. It was the provisional coverage ratio was 74% and the profit after tax was 38.4%. Okay, so the profit after tax for the scheduled commercial banks in 2022-23 was 38.4%. Okay, credit growth was 15.4% for the during the 2022-23. GNPA, gross non-performing asset, was at the 10-year low at 3.9%. Macro stress test for the credit risk projects the scheduled commercial bank system level capital. See, the macro stress test happens in which for the coming year till the 2024, it is seen that in the normal situation, in the baseline situation, what will be the capital buffers that the banks can maintain in the stress situation, in the medium stress situation, and in the severe stress situation, what capital buffers the banks will be maintaining. So under the baseline situation, I'm getting the answer C, that is correct, 16.1%. So under the baseline scenario, the banks will be able to maintain the CRAR of 16.1% in the normal situation. This much, the CRAR, the banks will be able to maintain. For the medium stress scenario, the banks will be able to maintain 14.7%, and the severe stress scenario, by 2024, March 2024, the banks will be maintaining 13.3%. So these are the assumptions. So in all the situations we have seen, see the CRAR, that is the capital adequacy ratio is 9% plus the capital conservation buffer is 2.5%. So the complete CRAR is 11.5%. The capital buffer 11.5% has to be maintained by the banks. And in the severe stress situation also, they are able to maintain above this percentage. Okay. The International Monetary Fund in its April 2023 projection expects the global growth to slow down further from dash in 2022 and bottom out at dash in 2023. So I'm getting the answer A, that is absolutely correct. So IMF has given the projection that the global growth will slow down further from 3.4% in 2022 to 2.8% in 2023. Okay, so the survey of professional forecasters that has happened in June 2023. So the real gross domestic product growth forecast was given by these forecasters for 2023-24 at around 6%, and for the 2024-25 they have given the forecast of real GDP growth to be around 6.4%. Okay, the annual headline inflation based on CPI is expected to be at around 5.0% for 2023-24 and 4.9% for 2024-25. So this is the expectations of the forecasters. Merchandise exports and imports are projected to decline. Okay, so this you do not have to remember, just try to understand the forecast, the percentage that the forecasters has given for the real GDP growth and the headline inflation. This has been released in July. The India's international investment position. So the share of debt liabilities, see the total external liabilities, that is how much we have to pay to the foreigners in the terms of profits for the investments that they have done in our country, like they have bought some bonds, they have bought some shares. So for that, the profits have to be given, the payments have to be done. Some loans we have taken. So for that also we have to make some payments. For the bonds, we have to pay some interest. For the shares, we have to pay the profits. And for other kind of investments, we have to pay a different kind of payments. So the share of debt liabilities in the total external liability, that means how much we have to pay. Out of that, the share of debt liabilities has increased to 50.2% in March 2023, which was 49.1% a year earlier. As a ratio to GDP at the current, so the ratio of net claims of non-residents on India to GDP stood at minus 11.2%. Minus here shows that we are paying outside. We are paying outside. So 11.2% in March 2023. So the net claims divided by GDP is 11.2% in March 2023. That is this much we have to pay outside. So this is the ratio of net claims of non-residents on India to GDP. So this is the net claims that has to be paid to the non-residents divided by the GDP, which has become 11.2% in March 2023, which is lower than before. Okay. So this is all here. If you want to join the live crash course, if you want to have the preparation, if you are not able to prepare yourself, or you are not understanding from where to prepare, how to prepare, then you can join the live crash course. If you want to practice, you can join the test series. Okay, you can check the link in the description box. This is for the YouTube community. So the live classes will not be provided in the YouTube now, okay, from tomorrow. So thank you, everyone. I hope you have liked the session. For the course students, they can stay and we will have a conversation. Like you can open your mic and we can discuss your queries. For the YouTube community, thank you very much. Sorry, my voice was a little down. But I hope you have liked the session, and the session you were able to understand the things. Thank you, Milin. Thank you, Sorish. Thank you, Prinka. Thank you, everyone. Okay, so if there is any